Hello, hello. Good evening, everyone. So, in previous class we have discussed some concepts of fiscal policy and we had to continue from taxation. Any questions so far? Any questions? Yeah.
States can levy the tax on anything or like as parliament creates.
States can levy tax on anything. States can levy tax on whatever state subject are. That means in 7th schedule of the constitution we have, probably in polity you would have studied, right? In 7th schedule there are 3 lists: union list, concurrent list, state list. In union list, concurrent list, state list, who can make laws on union list? Parliament can make laws. That means, and who can make laws on concurrent list? Both parliament and state legislature can make laws. Who can make laws on state list? Only states can make laws. Coming to execution, this is legislative function. Who can execute laws of union list? There is union bureaucracy separately, union home ministry, union defense ministry, union agriculture ministry. That is union bureaucracy. They will implement these laws. Who will implement concurrent list laws? States will implement concurrent list laws. Union, even though sometimes it makes the law, union government will not implement the law. This question was asked once in UPSC prelims. Who will implement? That means who is actually the executive agency for union list subject laws? States are implementing it, and state list execution will be done by who? States. So that means who is actually executing? Would they need the money, or whoever is making law, would they need the money? Whoever is executing, they will need the money, and that means you can say who is going to spend the money is actually who is executing. Union government will spend the money for these subjects, state government will spend the money for both these subjects. Who can make laws? Usually they will be able to create any, you can say, in the law they will mention parliament, if it makes the law, executive can create this tax, or sometimes the law itself will create the tax. That means in union list subjects, union government will impose the tax. In state list subjects, state government will impose the tax. And in concurrent list, usually state government will impose the tax. But it is possible that in the law it is written union government can also impose. But even if they impose, final implementation will be done by who? State. That means who can spend the money is always the state. Who can impose the tax on this concurrent list subjects? Maybe sometimes union list, state list also. I mean union or state government. Everybody is clear with this? Any other questions? No questions? Now coming to tax. Tax is a compulsory contribution to state revenue. That means state here means we are taking the definition, broad definition as government. Tax is a compulsory contribution means there is no choice there. Once government says you have to pay tax, you have to pay it. Whether you like it, you don't like it, doesn't matter. Most people don't like tax, but they still pay it grudgingly, they will pay it because there is no choice in paying tax. So it is levied by the government on workers' income and business profits. This is basically called as direct tax. Cost of some goods, services or transactions, this is called as indirect tax. Tax can be classified as progressive, regressive, proportional. When do we call something as progressive tax? As the income of a person keeps increasing. If more percentage of their income is paid as tax. Consider, for example, somebody is earning 10,000, no tax. Somebody is earning 1 lakh per month, some 20% tax. Somebody is earning more than 2 lakhs per month, 30% tax. So that means as you earn more and more, percentage of income as you can say the amount you pay as tax keeps increasing. That is called progressive tax. One in which upper income families pay larger share of their income. We are talking about share of income, percentage of income. So if they are paying more share of income, then you can say this is what we call as progressive tax. Proportional means it is same for everyone. Imagine in 10,000 a person who is earning 10,000 also pays 30%. Ambani also pays 30%. There is equality. But is this equality fair? No. Equality is not always fair. That is why we have created equity. Equity means, in polity you would have studied, equity contains vertical equity and horizontal equity. Horizontal means treat equals equally. People who are in the same income bracket, people who are earning around 5 to 8 lakhs, 7 lakhs or something, they will all be taxed at the same level. That is treating equals equally. Treating unequals unequally means, treating unequals unequally means if they are in different tax brackets, they should be treated differently. This we implement everywhere. In social inequality, in economic inequality, in all aspects. This is what we call as equity. In Article 14 of the Indian Constitution, equality before law is this horizontal equity. Equal protection of law is this vertical equity. You understood this? Same thing we have implemented, you can say, in our tax system also, mostly direct tax system. You understood what is progressive tax. As people get richer, they will pay more share of their income as tax. In proportional tax type of a system, they will keep paying same amount as tax. Then regressive tax. Regressive tax means if people are earning more, then they will actually pay less tax. This used to be a situation before Keynes came into picture. They used to assume that all economy is actually running through supply side economics. When supply side economics was there, people felt that the whole virtuous cycle will begin because entrepreneurs are investing. So it is because of them that entire country is running, so we should not tax them more. If we don't tax them more, then they will invest more. If they invest more, then it is good for the economy. This sort of a logic was used earlier, but nowadays there is no concept of regressive tax anymore. In most of the countries, nobody uses this regressive tax. Nowadays, every country almost uses the same progressive tax for direct tax, and sometimes in the middle somewhere in some countries have gone for proportional tax and then shifted back to progressive tax. Coming to direct, indirect, regressive tax is not exactly, you can say, in direct tax it is still not regressive, it is still progressive only. Direct tax means imagine income tax or corporate tax. Who will pay more tax? If you see, it is actually rich who will pay more tax, at least ideally. Maybe sometimes they give tax exemptions. For example, they may give tax exemption to Ambani if he invests in Northeast India. Why they were giving tax exemption? Because we want Northeast India to develop. We will say 10 years you don't need to pay tax. Then it has the potential to become regressive because we are taxing less for rich people. You understand? This sort of a thing happens in India also, in US also. But naturally, assuming you can say all these kept aside, normally what type of a system do we have? That is still progressive tax. Yes, indirect tax is transferred to consumer. That part we have not yet discussed. This part we are still only discussing about direct tax. Indirect tax is regressive, yes. Indirect tax, so I will discuss. This next we will talk about direct, indirect tax. I will discuss what it is.
Last year, Leicester's government reduced the tax for the high income bracket. So can we call it a sort of a regressive tax?
If it has to be regressive, then it is not just that rich people are paying less tax. Poor should be paying more tax. Then only we can call it as regressive. So if that type of structure is being created, then we can call it as regressive. Coming to incidence and impact. To understand what is direct tax and indirect tax, you have to understand what is incidence and impact. Incidence is where the point where tax looks like it is being imposed. Imagine a shopkeeper is actually selling something and this person is actually buying something. Government, it seems like it is imposing tax on the shop. Whereas what this person is doing, actually the product price is 100 rupees, government has imposed 5 rupee tax. What he will do is, he will add it in the bill and he will actually collect 105 rupees from this person. And that means who is actually paying the tax here? The buyer is paying the tax, and the seller, it looks like government has imposed tax on the seller, but the final impact is on the buyer. So incidence is on the seller, impact is on the buyer. This is what we call as incidence and impact. The point where tax looks like it is being, you can say, imposed is known as the incidence of tax, event of tax imposition. Impact is, you can say, the point where tax makes its effect. That is called as, you can say, impact. So impact means who is actually paying the money finally. Tax which has incidence and impact both at the same point. Imagine tax is imposed on you and you are the one who will pay the tax, like direct tax, income tax. You are earning, imagine, 50 lakhs per year and then they have imposed 30% tax on you. Then you will pay 15 lakhs per year as tax to government. That is basically what type of tax? That is direct tax, because incidence is on you, impact is also on you. You are paying back, paying government money. That is called as direct tax. Example is income tax for a person, and similarly there is corporate tax for a company. Both are similar, only who is actually paying this tax is different. Company is paying a tax, then it is, you can say, corporate tax. Person is paying a tax, then it is income tax. Then indirect tax. Indirect tax we just saw is incidence and impact are on different entities. Incidence, it looks like it is on the shop, but impact is on this person. That means whoever is buyer, that person is actually paying the tax. So that is indirect tax. Incidence is on one, impact is on the other, then it is called indirect tax. So basically you understood the difference between incidence and impact. Whoever, if you hit someone and the person feels pain or he is bleeding here means who is bleeding money, that means he is paying the money, then that is, you can say, direct tax. Here imagine you hit someone, somebody else is bleeding money, then it is, you can say, indirect tax. You understood this? So this is direct and indirect tax. Indirect taxes are usually, we cannot differentiate who is buying a particular product. Imagine somebody goes to supermarket and they buy a toothpaste or soap or something. Can we identify who the person is? Is there a record of who is actually buying this toothpaste? No. Everybody is buying same thing. If Ambani buys it also, it is same. Rickshawala buys it also, it is same. That means the tax that they are paying is equal. If it is equal, you can say in money terms it is equal. But if you see out of a salary of rickshawala, or you can say whatever the person is earning finally is 10,000 per month. In this 10,000, if he is paying 1,000 rupees as tax, indirect tax, he is spending entire 10,000 whatever he has. Out of that approximately average is 10% tax. That means 10%, 1,000 rupees he has paid as tax. That means out of his income, how much is he paying as tax? 10%. Imagine out of Ambani's income, let us assume Ambani's income is 10,000 crores. Out of that, he will spend maybe, you can say 1 crore per month or something, 10 crores in the year. Out of 10 crores, he will also pay 10% tax. That means 1 crore. Out of 10,000 crores, if he is paying 1 crore as tax, as a percentage of his income, how much is he paying? It is out of 10,000 crores. It will be 0.000 some percent. That means you can see who is as a proportion of their income, whether poor are paying more tax or rich are paying more tax. Poor are paying more tax. Indirect tax is regressive as a proportion of income. This is how they will write it. As a proportion of income means when you look at it as percentage of income, how much people are paying, then it is regressive. Even direct tax is seen as a percentage of income only. How much percentage of income people are paying. You understood this? So basically this is why indirect tax is regressive. So most of these taxes are very simple, you probably know all of them. Income tax is on people. Wealth tax, in India we don't have it right now, we used to have it some point in the middle. Wealth tax is on stock of wealth, whereas income tax is on flow of wealth. Flow of wealth means what? This year how much money we are getting into our family salary collection or something, that is flow, that is income tax. Wealth tax, imagine my income is 50 lakh, my wealth is 5 crore. 5 crore wealth means out of that if they collect 1% tax of my entire net worth, that is wealth tax. You understood this? Then corporate tax is same income tax on companies. Capital gains tax. Capital gains means when you do any capital investment, buy an asset, that is called capital investment. When you buy an asset for 1 crore and maybe you sell it for 2 crores later, that means next year you sell it for 2 crores, then you make 1 crore. That is a capital gain that you made. Capital gain means a profit that you made on investment. On this there is tax that is called as capital gains tax. In India we have two types of capital gains tax, short term capital gains tax, long term capital gains tax. Long term is flat 20% on whatever you make. Short term is whatever your income tax bracket, how much you are paying, same thing you have to pay. That is long term and short term capital gains tax. Then securities transaction tax we will discuss in detail, I have given somewhere here, we will come to that. Then indirect taxes, these things probably, service tax, we don't have all these taxes, everything is merged together into GST. Some of them are still there, customs duty is still there. What does it mean? When we do any import export, there may be tax on that, that is called customs duty. Mostly we don't tax exports, we tax imports. Why we don't tax exports? Because we want more exports to happen. Why do we want more exports to happen? So that we earn more dollar. Why do we need more dollar? So that we can pay for imports. India is an import dependent economy. We import 80% of all oil, 40% of our gas and 20% of our coal. India is an energy dependent economy. Because of this reason we need imports, and because we need imports we need dollar, because we need dollar we need exports. You understood this? So that is customs duty. Then VAT and other things all merged together. Excise duty on petrol, diesel, excise duty on alcohol has not been merged with GST. Excise duty is usually on manufacturing. If you manufacture some extra bottles of alcohol, you have to pay extra tax. So excise duty is on manufacturing. Sales tax we don't have it right now. So other things have been merged together. The securities transaction tax can be considered theoretically as both direct tax, indirect tax, but in India it has been classified as direct tax only by government. So if there is a question, the answer is direct tax, but we will see later why it is called, can be called both. Now you understood what is actually the meaning of direct tax, indirect tax. So look at direct tax. It is equitable in that it falls on those who can afford to pay. That means more direct tax is paid by who? By rich people or poor? By rich people. In that sense, equity is maintained, horizontal and vertical equity. It gives government direct control over people's spending. How? We can, if we want to reduce expenditure by people, we can increase direct tax, so people have less money in their hands, less disposable income. That means less purchasing power, less demand. So that means we can control people's spending. But there are negatives. It discourages hard work and enterprise. People have a tendency to compare with each other. People will feel, why should I pay 30% tax when another person is paying only 20% tax? So then it discourages. They will feel, if I am earning this much money and paying so much as tax, then why should I earn this much money? I can just enjoy my life or something. That means people will feel that it is unfair. So that is, it discourages hard work and enterprise. It increases time and resources spent on tax avoidance. Because this direct tax is high, it is 30%, but as you earn more and more and more, there is surcharge in India, it keeps on increasing. That means 35%, 40%, 45%. If you are paying 45% as tax, if Ambani, imagine, is earning 10,000 crores, 4,500 crore tax. Instead of that, he will hire a chartered accountant firm or something for 100 crores. He will say, you identify all the loopholes and reduce my tax. They will reduce it by 2,000 crores or something. That means you can see the amount of effort, that money that goes into avoiding this tax will increase as direct tax keep increasing. The tax on company profits tend to reduce investment. As we tax more and more of these profits, reinvesting of whatever these profits used to happen earlier, this will reduce, because now a lot of money went into tax itself. They have to give dividend to their shareholders also, and remaining money will be less, and that means reinvestment will reduce. It can be difficult and costly to collect. Can anybody explain why direct tax is difficult and costly to collect? What do we need to collect direct tax? What do we need to know? We need to know which tax bracket this person falls into. How do we know that? We should know what is the income of this person. He should have a bank account. His bank account should be linked to a PAN and Aadhaar, and whatever money he receives, he should put into that bank account. Then we should keep track of it, and then we should identify which bracket he falls into. That means we need to maintain a lot of records, and a lot of administrative burden is involved in this or not. So that is why it is difficult and costly to collect. Whereas in indirect tax, nobody cares who is buying this product. Everybody who buys the product pays the same thing. No records are kept on who is actually buying the product. So that means it is not very difficult and costly to collect.
Due to an organized sector, it is
Yes, it is even more difficult because it is an organized sector. We are unable to keep track of everybody's accounts, and they are not putting all their money into the account also. They are doing cash transactions, which means we have to, that is why, like I told you, I gave example of Project Insight, which we are deploying artificial intelligence, and we are doing lot of, you can say, human intelligence work also to identify who is avoiding tax. This is all difficult and costly to collect. You understood this? So coming to indirect tax, it does not discourage effort. People feel a sense of fairness, that rich people and poor are paying same. People don't have that level of moral development to think equity is fair. People still think equality is fair, and finally this leads to a situation where they feel this is fair. So then can be used for specific social policies such as reducing smoking or gambling. So we can identify how we can reduce particular aspects. We can tax more on cigarettes and pan masala, or we can tax more if they are doing any betting gambling on that particular. So this way we can identify, and we can tax only those things more, so that people don't have enough money to buy it, less people will buy it. So that is how we can targetedly reduce that such type of behavior. People who have a degree of choice in whether they will pay the tax. People have a degree of choice means they can choose not to pay the tax. How they can choose? If they don't buy the product, then they don't need to buy that, pay the tax. Imagine imported alcohol has sometimes 400%, 5%, 500% duty. People can just buy Indian alcohol, then there is no need to pay that much of tax. So that means you can see imported cars have higher tax, Indian cars have lesser tax. So that means we can see that people have a choice. If they feel that it is, I can afford it, then they can buy it, and then they can afford to pay the tax also. So this way people have a degree of choice. Earlier I told you, wherever negative externalities are present, this type of tax we impose. Pygovian tax, and Kerala imposed a fat tax to reduce obesity, and some other countries have imposed, even wherever high sodium content is present, junk food tax or something. Similarly, green tax on all the carbon emitting type of substances. All these are examples where in indirect tax we have imposed an extra tax to reduce that kind of consumption. It is also called conspicuous consumption. Conspicuous means usually people who have a lot of money, they will be willing to spend on it, and it is not exactly a need, basic need, but people will spend more on it. So that type of consumption we can reduce. Then relatively cheap and easy to collect, because we don't need to maintain all this data and records. It is relatively cheap and easy to collect. Then we already saw indirect taxes are regressive as a proportion of income. This is what we just saw. They fall more heavily on the poor. As a percentage of income, who is paying more? If you see, it is actually the poorer sections of society. The amount of revenue to be raised by excess duty or sales cannot be easily predicted. Why we cannot easily predict indirect tax? It will depend upon sale of the product, exactly. If it depends on sale, how can we predict the sales? What will it depend on? It will depend upon human behavior. Purchasing power is only one aspect. Demand contains two aspects: willingness and ability. Sometimes people have the ability. Ability is purchasing power. Second is willingness. There is no formula to predict willingness so far, because human behavior is something which cannot be predicted. Imagine you are going back from class and it is cold outside, you will feel like having tea. If the weather is very hot, you will feel like having lassi or something. Some days it is normal, you don't feel like having anything. How you feel like? There is no formula, theorem, anything which can predict the willingness of a person to buy something. You understood? Human behavior cannot be bracketed into any scientific formula so far. Maybe in future, it is maybe possible because of this reason. Because this willingness is a question mark, we cannot predict how much sales will happen. If we cannot predict how much sales will happen, we cannot predict how much tax will be collected. You understood? So this is basically difference between direct tax and indirect tax. This is conceptual difference. These type of questions are important in exam. In prelims, they will test conceptual understanding more. These are common type of questions in exam. Very rarely they will ask factual questions in prelims, in economy particularly. Concept is more important than fact. Doesn't mean that you should not read facts. One or two questions extra you can answer if you know facts. Coming to specific and ad valorem taxes. All progressive taxes are progressive in nature. Yes, all progressive taxes are progressive in nature. In the name itself, it is progressive. Maybe the question is all direct taxes are progressive in nature. So, if that is the question, then if the question says all direct taxes are progressive in nature, you can, in India, probably you can say yes, because that is how we have constructed the tax. In every country, it need not be the case like this. We have to assume, because in syllabus it is Indian economy, we have to assume they are asking about Indian economy, and we can say yes, it is all direct taxes are progressive in nature. Coming to distinction between specific and ad valorem tax. Specific tax, ad valorem. In very simple understanding, how to understand this? Specific tax means it is written in how much rupees is tax. Ad valorem tax means it is written in percentage terms. This is the only difference between them. Specific means, imagine, specific tax on a car is 1 lakh rupees. It doesn't really matter what is the price of the car. The price of the car itself may be only 2 lakh. Still the tax is 1 lakh. It may be 2 crores. Still the tax is 1 lakh only. That is called as specific tax. Because we are not mentioning it as a percentage of its value. We are only just giving a random number. That number is the tax that you have to pay for every unit of car that you buy. Ad valorem means percentage. That means you can say if you buy more units of a particular good, then you have to pay more, the same percentage. If it is you can say 10 rupee good, 10% is 1 rupee. If it is a 1 crore good, 10% is 10 lakh. So that means you have to, if you pay percentage tax, what type of tax is it? ad valorem. If you pay some rupees as tax, then it is specific. Specific tax is a flat rate of tax, whereas ad valorem is a tax is a percentage tax. Ad valorem literally the term means according to value. That means a percentage of that value is what we are talking about. It is imposed on the basis of monetary value of the taxed item. A specific tax is when specific amount is imposed on a good. So here we have just taken an example. Whatever we took the car as example, that itself you can keep. Imagine same example, let us take for both. Car 1 lakh rupee as tax, that is called specific tax. Car 10% as tax, this is called ad valorem tax. In India on cigarettes we have both specific and ad valorem tax. For 1000 units of tobacco, 1000 sticks of tobacco, some 4000 rupees. It doesn't matter what per stick tobacco value is. That means we just add 4 rupees per cigarette as tax regardless of whatever its original value is. This is what type of tax? For specific tax. Along with that there is also a percentage, 125% tax. In cigarettes we have huge amount of tax in India because it is a demerit good and we want to reduce consumption of tobacco. So that is where on a single product we have both specific tax, ad valorem tax. Amount of specific tax changes in same proportion as the quantity sold. If you want to increase total tax collection in specific tax, if you buy a car worth 10 crores also you still collect 1 lakh only. If you buy a car worth 1 lakh also you still collect 1 lakh only. Then what should you increase? We should increase number of cars sold, then only we will collect more tax. Whereas for ad valorem tax, both can increase. If you increase value of the, you can say car that is sold also you will collect more tax because it is percentage of the value. Or if you sell more cars, then also it is fine. It will be percentage of the value. You understand? That is this last point. Yeah. Yes, ad valorem means value of the item, value of the sale. Value of the sale means as a percentage of value of the sale. If value of sale is 10%, value of sale is 10,000, 10% on 10,000 is 1000 rupees is collected as tax. You understood this? So, coming to tax base. Tax base means, imagine in India we have population, imagine let us assume 100 people are present. Out of these 100 people, if you consider how much income they are earning, 100 people together have earned 100 rupees. Out of this 100 rupees, how much is taxable by government? This is called as tax base. Total income of this population that has been earned this year, which is taxable. Why some income is not taxable? What is exempting it from taxation? For example, government has said a person who is earning up to 7 lakh rupees, they don't need to pay tax. That means we have given an exemption or not. Agriculture, if a person is earning any income in agriculture, then they are not need to pay tax. In India, basically already you can say 55% in India people are dependent on agriculture, indirectly, directly imagine some 48%. Let us assume 50% are not paying tax because they are earning agricultural income. This is in population if you see, then other you can say 40% people, they are not even earning anything because they are either old or children. Remaining people are only 10%. Out of that 10% who are not in agriculture and also earning, among them, if you see, there are about 5% people who are earning less than 5 lakh rupees last year itself. Now if you take less than 7 lakh, if they don't need to pay tax. So that means what we remain with, economic survey 2-3 years ago it estimated that totally 1.7% of the population only will fall under this tax brackets where people actually are paying direct tax. Indirect tax everybody will pay, but direct tax if you see as a percentage of total population, around 1.7% only people are paying this direct tax. Because India is relatively a poor country. Most people are not earning more than 7 lakh and or maybe they are in agriculture sector. As a proportion of voters, if you see people who are above 18 years of age, then 7% people are paying tax. As a proportion of entire population, 1.7% are paying tax. You understood this? So this is direct tax. Indirect tax, how many are paying? Everybody has to pay indirect tax, whether they are working, not working, earning, not earning, child or old, or it doesn't matter really. Anything that you buy, it will have indirect tax within it. So now, tax base means income that can be taxed. we are only looking at usually tax base as a concept and mostly we looked at with regard to direct tax. With regard to direct tax, how much money, here we are not looking at population size, how many people can be taxed, how much money can be taxed. All 100 people put together have earned 100 rupees, out of that 50 rupees can be taxed, then that 50 rupees are tax base. You understood this? So a base, tax base is total amount of assets or income that can be taxed by the government. In a given year, you can say what is the total income of people of the country this year, how much can be taxed. For example, minimum amount of annual income that can be taxed. Imagine as of now recently from 5 lakh to 7 lakh we have increased it. What will happen to our tax base? It reduces, because now even if person who is earning 6 lakh earlier this income was part of tax base, now that is also not part of tax base. That means there is reduction or narrowing of tax base. Imagine next year we will reduce this to 3 lakh, then what happens to tax base? It will widen or it will increase. That means we will collect more amount as tax. Imagine we will add agriculture to tax 5 years down the line, then what happens? Again widening or increasing of, you can say, tax collection will happen. So this is the meaning of tax base. Coming to tax expenditure. Tax expenditure means government will try to, you can say, ideally government had to collect this tax, but government will waive that tax. It says I will not collect it, you can keep it. That means without collecting, if it is living, ideally it should have collected the tax. In the law it is written that it should have collected this tax, but it is not collecting it. So it is as if they have collected it and then spent it on the same purpose. That is why it is called as tax expenditure. Imagine you go to a restaurant, the bill is 980 rupees, 20 rupees the person kept there, you did not take it, you kept it there itself. That means it is a tip for the waiter or something. It is as if you have taken it in your hand and given it to the waiter or not. Both are same. Tax expenditure, you spent that 20 rupees. Government did not collect this 20 rupees tax from people. Ideally it is your money, but they still didn't collect it. That is why we call it as tax expenditure. You understood the meaning here. Tax expenditure is a tax that government could have collected but did not collect. Indicates how much more revenue could have been collected by government if not for exemptions, deductions, rebate. Shows the extent of indirect subsidy. Indirect subsidy means directly they are not collecting it and spending, that is direct subsidy. Indirect because they are not collecting it at all, it is indirect subsidy enjoyed by the taxpayers in the country. It is also called revenue foregone. Foregone means given up. Revenue that could have been collected but was not collected, that means it has been given up. Presented to the parliament at the time of union budget. We already saw that budget means, or you can say custodian of public purse is legislature. They have to give an account to legislature about everything they are doing and not doing also. They have to explain why they did not collect this tax ideally when they could have collected it. So that means they will give a statement of revenue foregone also to parliament for it to approve. So this is, you can see in the budget that is also added. An example I have just given here. A few years ago, you can see UP, Uttarakhand, these states made this dangal as a movie tax free. This is just an example. Many areas are there where they will give, you can say, make this, anything whatever they feel like they will make tax free. So majority of the cases there is some rationale behind it. In some cases you can say based on whims and fancies of ministers also they will make it tax free. It is like, you might imagine in old movies you would have seen king when he feels happy after a dance, he will take out a gold chain and he will throw it. This is how you can say government sometimes will declare something as tax free whenever they are happy. So this is the meaning of tax expenditure. Everybody understood what is tax expenditure. Then coming to tax buoyancy. Buoyancy as a concept is actually a physics concept. If something is floating, we call it as buoyant. So if it is sinking, we don't call it as buoyant. Imagine GDP is increasing like this. Ideally as GDP increases, what does it show? Tell us. Production is in the country is increasing. When production increases, what should happen to tax collection? It should also increase. But tax collection should increase more than production, because tax collection means direct tax, the person who is earning profit, he will also pay tax. Indirect tax, the person who is buying this product, he will also pay tax. So when actual mathematical meaning of tax buoyancy is when GDP is increasing by 1%, tax collection should increase by more than 1%. Tax collection should always be floating on top of this graph of GDP. That is why it is called as tax buoyancy. You understood this? Tax collection should always be higher than increase in GDP, then we call as tax is buoyant. In some textbooks they have given a definition where it is written as, if GDP increases by 1%, tax collection should increase by more than 1%, then we call the tax as buoyant tax. Buoyant means it is floating on top of this GDP in this graph. You understood this? Everybody understood what is the meaning of this tax buoyancy? It explains the relationship between the changes in government's tax revenue growth and the changes in GDP. GDP means production. As production increases, every product extra produced has GST collected. And also the person who is producing this product, he will also pay direct tax. So tax collected by government will slightly be high. So that means as GDP increases, tax collection should also keep increasing slightly more. So that is basically, you can say, buoyant tax. When a tax is buoyant, its revenue increases without increasing tax rate. Government is not changing tax rate, still revenue is increasing because production is increasing. If tax buoyancy is low, it shows that ideally it should have increased, but it is not increasing. What does it tell us? We are not collecting the tax, we are not capable of collecting the tax properly. Poor tax collection mechanism, or large unorganized sector who are actually not, you can say, disclosing to government that they are producing and earning all these profits, etc. So this is tax buoyancy. Next is fiscal drag. Okay, tax expenditure, someone has asked again. Tax expenditure means government usually taxes, you can say, people some 100 rupees. Out of that, government says 10 rupees you don't need to pay, you don't need to collect, we will not collect it as tax. It is as if they have collected it and again spent it back in the economy as expenditure. So it is a misnomer. If you look at it, it will not give you the right kind of intuition. The actual meaning is tax that could have been collected but was not collected is called as tax expenditure. So coming to fiscal drag. Fiscal drag, earlier we had come across this. In a progressive tax system, progressive tax means what? We have some sort of slabs for tax. People who are earning less will pay less tax. People who are earning more will pay more tax. In a progressive tax system, as wages rise, higher tax is collected. This part everybody is clear. This leads to, so imagine along with inflation, right now inflation is happening. A person was earning this much as income. Because of inflation he will shift to this level. Because he is shifting to this level, he will have to pay more tax or not. His real income has not increased, his nominal income has increased. But overall tax collection, what happens to that? Tax collection will increase. As tax collection will increase, what happens to this person's purchasing power? All the people who are exactly at this tax bracket, if they are all shifting, about 20% of the population will shift from lower tax bracket to higher tax bracket, and 20% of people will have less money on their hands, then what happens to demand in the economy? Demand will reduce, creating a slowing of virtuous cycle or even maybe vicious cycle sometimes. That is what we call as a drag on the economy because of this reason, also called as fiscal drag. In a progressive tax system, as wages rise, higher tax is collected. This leads to reduction in aggregate demand, especially during times of inflation. You can say real incomes don't rise but taxes rise. So how are we solving this problem? We don't usually imagine a person is earning 9 lakh income. From there if he jumps to 11 lakh, tax collection ideally should, imagine now 11 lakh means 20% tax bracket. We don't collect 20% of 11 lakhs as tax. We collect until 10 lakhs, imagine it is 10%. Until 10 lakh until 5 lakh it is 0%. Until 5 lakh if it is 0%, we will collect 0. From 5 lakh to 10 lakh it is 10%. That means we will collect 50,000 of 5 lakh. And from 10 lakh to 11 lakh it is 20%. Then we will collect 20,000 as, you can say, tax. So totally how much tax this person has to pay is only 70,000. Why we have created this type of a system is to avoid this fiscal drag. You understood? If we don't have this system, anybody who shifts from 9.9 lakh to 10.1 lakh has to suddenly pay a huge amount of tax. So probably they will say, I don't want this promotion or I don't want the increment, because now actually they will get less money if they get that. You understood this? Okay. So what system we are using right now? Let us assume that 0 to 5 lakh there is 0 tax. 5 to 10 lakh there is 10% tax. 10 to 15 lakh there is 20% tax for simplicity. So in this case, imagine a person who was earlier earning 9 lakhs and now he has shifted to 10 lakhs, maybe 11 lakhs. At 9 lakhs, imagine if this system was not there. From 9 lakh to 11 lakh if this person shifts, at 9 lakh tax is 10%. So he was paying 90,000. From when he shifts to 11 lakh, tax will become 20%. For 11 lakh, 20% is how much? 2.2 lakh. You can see the amount of tax that will change is huge, and that means the person has to pay massive amount of tax. So here actually what happens to his purchasing power is it reduces. To avoid this, what we have done is, if this person is actually paying, earning 9 lakh tax, 9 lakh income, the tax is not on entire 9 lakh. First 0 to 5 lakh actually tax is 0, because for everybody it is 0, including this person also. The first 5 lakh that he has earned, on that there is no tax. After 5 lakh extra, whatever he has earned, this part is 0. This part until 9 lakh, whatever remaining 4 lakh was there, on this 10% tax. That means earlier he was paying 40,000 tax. Now imagine he has gone to the next tax bracket. Now here for this 5 lakh he will pay 10% only, that means 50,000 tax. For the extra 1 lakh he will pay the next tax bracket, that is how much? 20%, that is 20,000 tax. 50,000 plus 20,000 is 70,000. You understood? This is how we calculate tax. Why we calculate like this? Because to avoid this fiscal drag. This is how everybody is paying tax now. This is how tax is being calculated. You understood this? Coming to tax elasticity. I think elasticity as a concept we saw earlier. Elasticity means if there is a relationship between two variables, then we call them as elastic. If there is no relationship between two variables, we call them as non-elastic. It refers, here we are talking about tax with regard to tax revenue and tax rate. These two variables, what is the relationship between them? If we look at it, actually there is a relationship, that means there is elasticity. What is that relationship is actually explained by Laffer curve. This Laffer curve we have already seen earlier. Among all the curves, Laffer curve means as we tax more and more people will start, tax collection will increase until a point. After that they will try to avoid tax and evade tax. So that means tax collection keeps reducing. I also told you that India is somewhere here and we are trying to reduce the tax so that our tax collection will increase overall. So this part we saw among all the graphs that we saw, I think in first class or something. So this is the meaning of tax elasticity and Laffer curve. Any questions in this tax elasticity? Everybody is clear with this? Yeah. Yes, any income, it doesn't matter how much income you are making, it is exempt as of now. If they feel that you have manipulated something and shown income as agricultural income, even though it is not agricultural income, they have freedom to do investigation, do raids. Yes, all agriculture is, you can say, tax exempt in India. Property, yes, property is different. You can buy, if you buy and sell property, that is capital gains tax. Yes, it is only on products. If you grow something in that land, on that you got income by selling it, right? On that there is no tax. So, coming to cess and surcharge. Cess is imposed by central government. It is a tax on tax levied by government for a specific purpose. Tax means, imagine 100 rupees is your income, 10 rupees is the tax. 10% cess means 10% is not on the income, it is on the tax. 10% of 10 rupees is how much? 1 rupee. That means this 1 rupee extra is added. That is called as cess. Tax is tax on income. Cess is tax on tax. That is the meaning of tax on tax. SS is imposed by central government. It is a tax on tax levied by government for a specific purpose. There is a clear purpose for which they levy. That means there is a Swachh Bharat cess, road safety cess, agricultural infrastructure cess. This type of particular cess they will create only for a particular purpose. Generally, cess is expected to be levied till the time the government gets enough money for that purpose only. Once the purpose is served, they can no longer levy this cess. Education cess, personal income of 30% or more, they will levy education cess. You can see, if cess is 10%, it is actually 10% of the tax that you are paying. Here, cess is 3%. That means, imagine income tax is 30% that you pay. That means 30 rupees of not 100 rupees. Out of that, 3% of 30 rupees is what? 1% is 0.3, 3% is 0.9. That means extra 0.9 rupees you have to pay as tax. You understood? This is the meaning of cess. Cess is levied on top of tax. It is same for everyone. We don't usually differentiate between rich people, poor people. It is same for everyone. The amount is used for a specific purpose. States don't usually get any part of cess. Recently, states have protested in GST council and such that center is overusing this cess and states are not getting any part of it. So this is basically how cess works. Cess is initially credited to Consolidated Fund of India, but once appropriation is done, that means once this, you can say yesterday we saw a process of budget, once they decide how to spend this money, it is taken out from there and put it in a separate account which is only be used for that particular purpose, so that it doesn't get mixed up with other things. Budgeting is easy later, that is why you can say they put it in a separate account. These are all examples: Swachh Bharat, secondary, higher education, Krishi Kalyan, cess, etc. Coming to surcharge. Surcharge is additional charge or tax levied on an existing tax. This is also exactly tax on tax. It is not a tax levied on full income that you get, it is tax on tax. Unlike a cess which is meant to raise revenue for a temporary need, surcharge is permanent. Once surcharge comes into picture, we are not collecting surcharge for a particular purpose. We are collecting it, you can say, generally. Until government says so, they will continue to collect it. It is levied as a percentage on the income tax payable as per normal rates. That means, if income tax is 30%, 20%, you can say as a percentage of that, they will extra surcharge is also collected. So it is charged if income exceeds a certain limit. That means we can give exemption to surcharge. Surcharge in India only comes into picture after you start earning more than 1 crore. That means people who are earning less than 1 crore, no need to pay this surcharge. That means it is not same for everyone. It is different for different people. The rate varies according to income. That means people who are earning more than 1 crore is not same surcharge as more than 5 crore, more than 10 crore, different surcharges may be there. Government can use it for any purpose. And this part is wrong. This they have changed it now. States will not get a part of this surcharge. You can change it if you are if you have that handout. States will not get part of either cess also, surcharge also. This is characteristics of cess and surcharge. Everybody is clear with it. Can you tell me the differences between cess and surcharge? Cess is temporary, surcharge is permanent, correct. Then cess is for a specific purpose, surcharge can be used for anything, also correct. Then surcharge is progressive, cess is regressive, also correct. Surcharge can be exempted for people, different for different people, cess is same for everybody, that is also correct. What are similarities between cess and surcharge? Both are tax on tax. Both are not shared with states. These are similarities between cess and surcharge.
Sir,
Yeah.
which types of tax surcharge or cess apply? Direct or indirect or both?
It can be applied for both. There is no restriction anywhere written that it has to be applied only on direct tax, indirect tax. But usually, surcharge has not been applied on indirect taxes. It has been applied on direct taxes so far. Cess has been applied on both direct taxes, indirect taxes also. You understood?
So surcharge is nothing but increase in tax.
They are trying to collect more tax. That is the intention. But how they are trying to collect more tax is through this mechanism, surcharge.
कोई प्रोडक्ट देखा था सर, उस पे था जो स्वच्छ भारत का जो सरचार्ज था वो सेस था, तो उस प्रोडक्ट पे लिखा आ रहा था, जबकि जो प्रोडक्ट है वो तो इनडायरेक्टली रूप में है.
Correct. There they have used it as indirect tax. That means extra Swachh Bharat cess you would have to pay if you buy that particular product. That means on that product already GST will be present. Along with that GST, imagine you are paying 100 rupees of total GST. 10% surcharge means 10% extra, or 10% cess means 10% extra on that 100 rupees is 10 rupees extra you have to pay. So this is.
So like this 1 crore criteria is the only criteria where surcharge is levied?
This is one example where surcharge is being levied. They may create any different type of surcharge also. There is no restriction anywhere written in the constitution or in any law where you have to use it. That is left to the government. Ideally only central government will levy it, but because there is no restriction written on state governments to levy it, West Bengal government imposed this cess also. Other state governments have not done it, but some state governments can also impose it. They may say nowhere it is written that we should not impose it.
Direct income, it is imposed on like surcharge or for the income part, on direct, like direct tax method.
On direct tax,
The cess is imposed on income or the on surcharge itself.
cess is imposed on tax. Imagine your income is 100 rupees, tax is 30 rupees. On top of this tax, extra, imagine 10% of this 30 rupees will be 3 rupees extra. That is cess. If you want to impose cess like this is how cess is imposed.
That's a surcharge as well.
Yeah, same for surcharge. That is the similarity between cess and surcharge. Both are tax on tax. For example, in India right now, how surcharge is being used. Taxable of income of over 1 crore has surcharge of 15%. Imagine you are earning 1 crore. If you are earning 1 crore, what is the tax that you will usually pay is 30 lakh. 15% of this 30 lakh, 10% of 30 lakh is 3 lakh, 5% is totally 4.5 lakh extra you have to pay. So totally your tax liability will become 34.5 lakh. You understood? So here I have just taken 1.2 crore with an example there. The government announced a surcharge of 25% on annual income between 2 to 5 crore. If you are earning 5 crore, then it will be, instead of 15% they have increased it to 25%. If you are earning, you can say more than 5 crore, 37%. Imagine your total income is 10 crore, then 3 crore is normally your tax. On that 37% means how much? 33% is 1 crore, slightly more than 1 crore, let us assume 1 crore. So totally 4 crores you have to pay tax instead of 3 crore. You understood? So on top of this tax, extra surcharge is 37% for people who are earning more than 5 crores. So you can see that tax liability is relatively high. As you earn more and more, you pay more and more as tax. Cess and surcharge are like compound interest. Not exactly like compound interest, but you can think of it as, yeah, on one on top of the other. Similar pattern is visible here, but it is not exactly the same. Coming to securities transaction tax. Securities transaction tax, recently they have increased the securities transaction tax. It is in news. That is why I just wanted to discuss about it. STT is, you can say, can be considered both direct, indirect. STT, before it was introduced, actually there was a person named as Tobin. Tobin got Nobel Prize for suggesting this Tobin tax. He suggested a type of tax, others called it as Tobin tax. Why did he suggest this tax? What is it? Basically, in any market, that means in capital markets, in share market, etc., there will always be some people called as speculators. What is the meaning of the speculators?
They speculate the prices of the shares.
Speculators means they are just buying and selling on a daily basis. That means they are buying a product and selling it back, selling in the market. That means imagine you buy SBI shares at 400 rupees and sell it back at 401 rupee. If you buy 10,000 shares, you make 10,000 rupees in a day. So that means this is what they are trying to do. They are trying to speculate. They are trying to buy low and sell high. So they don't want to hold it. They don't want to keep it, you can say, for long. This is share market. Imagine same thing may happen in commodities market. They buy some tur dal for 140 rupees, 142 rupees. When it increases, they will sell this tur dal. So that means they don't have any intention to use this tur dal. They will just buy it and sell it to increase their profits. They are called as speculators. Speculators means people who are participating in the market for a quick profit. They don't have any intention to be invested in the long run. You understand? But the problem with speculators is, as speculators increase in the market, what happens is, imagine how prices of any commodity are decided. Normally what decides price? Demand and supply. There is a tug of war that happens between demand and supply. You can say then the price is decided based on the forces on both sides. Imagine a speculator. This person is buyer. 2 minutes ago he was a buyer. He is pulling the price this way, and then suddenly he will jump on the other side and he will pull the price that way. Then what happens in this tug of war? Imagine two people are jumping this side and that side. What happens to this? Then it will destabilize and go, you can say, in both directions. Somebody will fall. So you understood this. That means the center point is moving in both directions. As price moves too much, this is what we call as volatility. Volatility means too much of movement in price that happens on a single day. Why is so much of movement is happening? Because same people are jumping as both sellers and buyers, and if you keep on doing it, then the price keeps on moving. It is not stable. As price becomes too unstable, it goes up and down, then long term investors are afraid to invest in this type of a market, because when they want to sell their product after 5 years, the price may actually be low and they may not be able to make good profit. You understood? So that means because of this volatility we are scaring away serious investors. So what is the problem here? Volatility is the problem. How to solve this problem? Tobin gave a solution. See, we should not discourage long-term investors, we should only discourage short-term speculators. And to be able to do that, how to, you can say, create some sort of a mechanism. So he came up with Tobin tax. Tobin tax is very simple. If you buy a share, you will pay very little amount of 0.01%. Imagine your share's worth is 1 crore. 0.01% is probably 10,000 of 1 crore or something as tax. That is, you can say, when you buy it. Then again, if you imagine 1 crore worth of shares you sell after 10 minutes, then again same 0.01%. Most of the speculators, what they are doing, they are buying and selling 100 times a day. If you do 100 times buying, then you have to pay 10,000 100 times for buying, 10,000 100 times for selling. Then it will become substantial amount of tax or not. That means we are discouraging too many transactions within short span of time. But for a person who is going to buy and hold for 3 years, he won't mind if he is buying 1 crore worth and paying 10,000 tax, it won't matter much. You understand? That means it does not discourage long-term investors, it will only discourage speculators. This is basically Tobin tax, for which he got Nobel Prize. He also said a second point, the tax that has been collected here will not be very significant, so for every country, in that country itself it won't be significant. Major goal is to reduce speculation. This money it should be given to international agencies as donation, so that they will become independent and they will not be overly dependent on any one country like US or something. But that was not implemented. Every country implemented their own version of Tobin tax. In India it was called as securities transaction tax. The tax is on both buying and selling. Imagine if you are a buyer, government taxes you, you have to pay it. But if you are a seller, sometimes what happens is government taxes you, you are trying to sell it at, you want to sell it at 100 rupee, government taxed you 0.01. You will sell it at 100.01 and then push the burden onto the buyer himself. This is what every seller will do normally in indirect tax, right? So that means you can see that ideally government wants it to be a direct tax. Government is imposing on both, but buyer is paying his tax also and seller's tax also. You understood? This is why conceptually we can consider it as both direct tax and indirect tax. But government's intention is it to be only direct tax. So if there is a question they are asking, directly whether it is direct tax, indirect tax, then the answer is it is direct tax. You understood the meaning of what is this Tobin tax? Same securities transaction tax we have imposed in commodities market also. Same purpose, same logic, everything is same. Even tax rate is same. That is called commodities transaction tax. CTT. STT is securities transaction tax, CTT is commodities transaction tax. So this is meaning of, everybody understood what is speculator, speculation. This is also an important type of concept for prelims. Who is an investor and who is a speculator? Investor, who is somebody who invests and he stays for the long term. Speculator, he is just trying to make a quick profit, is a speculator. Negatives of speculation is what?
Too much fluctuation in the price.
Fluctuation in price, which we call as volatility. But there is also a positive to speculation. Because there are enough speculators in the market, what exactly is a market? When do we call something as a market? Where you can buy and sell. Only when somebody is always there to buy and always there to sell. Whenever you go there, whenever you want to buy something, it will always be there. Then you have confidence on that market, you call it as a market. When an Indian market has to develop, then people should gain that confidence that whenever I try to sell something, there will always be somebody to buy it. And whenever I want to buy something, there will always be somebody to sell it. And speculators are doing that job of increasing confidence among investors that whenever I want to be, somebody will always be there. That means they are also creating liquidity in the market. Imagine I own 10,000 shares of Adani Ports. I want to sell immediately because I want immediate money. There will always be somebody who is willing to buy because a lot of speculators are there in the market. You understood this? Yes, it is possible. Wherever speculation exists, government can impose, you can say this. Then it will be called as currency transaction tax or something.
So it will be always more when we sell and it will be less when we buy.
Yes, people who are, buyers will have to pay both versions of the tax. Most of the cases, this is how it is working. Yeah.
How is this indirect social
In practice, it is working as indirect tax. If you have done any trading, imagine you go to some portal, Zerodha portal, you want to sell your shares, you can choose at what price you want to sell the shares. You will calculate, okay, both security transaction tax also, you will add it and you will say, I will only sell it at this price. When everybody does the same thing, then you are trying to collect that money from that person. You understood this?
In recent case, Hindenburg can be considered as a speculative.
Yes, not same.
But that was short selling.
That is short selling. That is,
They have infused the volatility in the market.
yes, you can also consider it as speculation. Short selling means they deliberately release information which will reduce the price of shares, with that they can try to make money. Short selling is usually, normally people, if they want to make money in the stock market, what do? They will buy it, they will wait until the prices increase, they will sell it. But there is another way also. If the price, you know the price is going to reduce, then what you can do is, there are a lot of brokers. These brokers also do lending of shares. Just like money is lent, shares also can be lent. When you take shares on borrowing, you pay back with shares, again you give back the same shares. It doesn't matter what the price is. Borrow the shares, you give the shares. Right now imagine you borrow the shares. You borrow the shares when they are 100 rupees, Adani shares are 100 rupees. This Hindenburg borrowed the shares at 100. Then it sold the shares. How much did it get? Today's price is 100. Then it releases a report saying, Adani, you can solve these problems are there. Then suddenly it will fall from 100 to 60. Then it will buy back the shares at 60 rupees, same number of shares. Then how much it remains with? For every share it remains with 40 rupees or not. Then it gives back whatever it has borrowed. That means it made a 40 rupee profit. This is called as short selling. You understood? In the market, players can make money when both prices are increasing and the prices are decreasing both. When prices are increasing, it is called as long position in the market. Short position means the short selling. They will borrow the share, sell the share, then they will buy it back and pay back both their loan of shares. You understood short selling? This short selling is done by, you can say, companies. Hindenburg, sometimes they are just rumors and again the price will shoot back up normally. Sometimes actually there is some truth to it and nobody else knows. They would have done thorough research and nobody else yet knows it, and that is their value. That means they will do short selling because now the report is released and people will do close analysis and they will also realize and its value actually comes down. Then also they make money. But we cannot be sure whenever short seller is saying whether it is true or false until we ourselves verify it. You understood this? So this is speculation. Speculation has advantages, liquidity in the market. Whenever you try to convert it into cash, it is available. Whenever you want to sell shares, you can sell it, convert it. And negative is volatility in prices. You understood this? Any questions? Yeah.
Short selling is like a derivative. Can we find sell and then
It is not exactly a derivative. Derivative is slightly different. It is an instrument which derives value from something else. Right now you are borrowing a share. Just like you borrow money, you can borrow shares also.
just like in Adani futures or in Adani futures.
Futures are derivatives. Futures, the word future when it comes, it is automatically a derivative.
Future it derivative. So first I sell the future, and then price decreases. So I bought.
Yes, if you have to sell the future, then it is automatically treated as a broker has given a loan of that future to you. They will collect interest for that future also. When you make the profit back, they will collect interest for it. All this will not be visible in that portal, but it is collected at the end when you make the money. You understood this? So, coming to GAR provisions. So, in India, there are two terms with regard to tax. If government is unable to collect tax, it can be either because of tax avoidance. People will avoid tax by finding all kinds of loopholes, legal loopholes. That means legally they are trying to avoid as much tax as possible, and finally when it is not possible to avoid, they will pay it. This is called as avoidance. Avoidance is not illegal. They will hire some experts and identify where all they can avoid this tax. Then there is one more thing called as tax evasion. Evasion is illegal. Evasion means ideally they have to pay tax. They will send wrong information to government. They will file returns with false, you can say, numbers. Then claim that we have not earned this much money and pay less tax. That is called evasion. Evasion is punishable offence. Majority of the cases are of evasion are civil offences. Civil means you have to pay penalty, interest later if you are not showing proper numbers. In some cases particularly it may even attract criminal, you can say, penalty. They may go to jail for 2 months, 3 months. So this type, it is very rare, but those is also possible. So this is basically difference between evasion and avoidance. You should know that evasion is illegal, avoidance is legal. But we realized that in India avoidance has become such a norm that everybody is doing some sort of avoidance, and government is losing so much of tax because everybody is trying to do avoidance. So government felt we have to do something to address this avoidance problem. But in every case where they are doing avoidance, small amounts of avoidance are not going to be significant for government. That kind of effort is not worth it to pursue, because even if they do it, we will not be able to earn much money there anyway. So government felt, see, whenever the money that should come to government is more than 3 crore, in these cases we should not allow this avoidance. And then they declared, if avoidance is happening where the government should collect more than 3 crore, then it will be declared as evasion, illegal, that means evasion only. You understood? They created rules where they said that general anti-avoidance rules, you can see that avoidance beyond a point is going to be not possible. That is why anti-avoidance rules are created. Parthasarathi Shom recommended these anti-avoidance rules, and anti-avoidance means beyond a certain limit we will not allow avoidance. What is that limit? Usually it is 3 crore. If any type of avoidance they are doing more than over 3 crore, and also they have listed a long list of rules are there, all those are not important for us. When these rules will apply is when more than 3 crore tax should be collected, then only they will apply. If they are not, you can say more than 3 crores is not going to be collected, the amount of car tax that will be collected is less, then they will not bother about that part. You understood this? If government officials' time and effort has to be spent, then significant amount of tax should be collected for government. Otherwise it is not going to be worth it for government to exercise all these things. This is the meaning of GAR, General Anti-Avoidance Rules. In simplest terms, think of it like this. Avoidance is normally legal, but we have put a limit on it beyond which it will become illegal, and that is how we have done it is through GAR, that means General Anti-Avoidance Rules. You understood this? So next is GST. GST is in general important. Yeah.
So, what about the big sports celebrities when they change their description from the tax in Telugu is not a cricketer and he is an actor, and so in order to avoid the tax by doing the acting and the graduate, and there is nothing in the government can do. So what about that?
Cricketer and actor, for government there is no, it doesn't matter, right? How much money you are earning is more important for government rather than how you are earning. You may earn through your cricketing fee or maybe through endorsement or acting, it doesn't matter for them.
Also, they change their description from the cricketer to actor in just like the case of Howard in
Then they are showing their property or that.
Like for example, they are cricketers and now they are doing an act, but they are not doing as cricketer. They are doing as an actor in Howard to say.
It doesn't matter, it will come into your account, right? Is when the money, it won't reduce the tax. Direct tax is same, right?
So for example, like the coconut oil, like if we use it as edible oil, then there is more less tax, and if we use it as cosmetic or other chemical oil, then it is more tax.
That is true for, you can say, indirect taxes. Here both cricketer and actor, direct taxes, when it comes into your account, we are not really bothered about how it came. If it is by legal means, then it is government is satisfied. When both monies are added, put together, imagine Sachin Tendulkar is earning 1000 crores, put together everything. Then 1000 crores means they will identify how much tax, 30% tax bracket, how much surcharge, 25% surcharge, they will just add that. So imagine some people are doing 7-8 professions. They are doing acting, they are doing dancing, they are doing everything. Then it doesn't matter what they are doing. For government what matters is how much money are they earning, how much are they paying tax. In direct tax it won't matter what they are doing. In indirect tax it will matter where they are using it, depending upon use the tax may be different. You understood this?
Sir, here are some exceptions. This is sir, after
Yes, that's what I told you, agriculture, right? With agriculture, if they are earning, only that part is exempted. Otherwise, remaining things, this type of exemptions exist. For some, agriculture is the biggest exemption. Many people are actually earning money through other means, but they show it as a part of agricultural income, and this exemption is there. So government has freedom to do investigation and identify whether this is actually agricultural income or not. But otherwise, apart from these exemptions, then it doesn't matter. Once the money comes into your account, if you cannot show proper exemption, then you have to pay that tax. Will avoidance lead to tax evasion? Tax evasion is illegal, avoidance is legal. Both will lead to loss of tax to government, first thing. Second thing, beyond a certain limit, we have made avoidance also illegal, and that means you can say that it has become like evasion. After 3 crore, if the single person has to pay, or in a particular company has to pay, then you can say we can consider it as illegal, and in that sense it is as if it is evasion. Yeah.
This year it was heard that there are 2 different regimes on which a person's direct income can be taxed. What does this dual regime mean?
Dual regime means, in old regime whatever tax was there were many exemptions. So what they have done is, in the long run what they want to do is, they want to shift to a situation where all these exemptions are removed so that simplification of tax system will happen. But they don't want to create people, frustration in people. Because of this reason, they have created a choice. They have created a new type of tax system where exemptions are not allowed, but tax itself is slightly low. If you want to shift, you can shift to the new tax system. When you are filing tax, they will give you an option. Do you want to shift to new tax system? But if you do, then you cannot claim any exemptions. If you want to stay in old tax system, tax is slightly high, but you can claim all the exemptions.
When did it start?
It's, I think 2 or 3 years. It's been more than probably 3-4 years it has been since this new tax system has started. It is already there. Right now they have just changed the, you can say, slabs within this tax system.
Can it be retrospective? Anytime if the government wants,
If it wants, yes, because it is a civil law.
introduce a new regime and can make it applicable retrospectively?
Yes, because it is a civil. In Article 20 in the Constitution it is there. Retrospective criminal legislation is not allowed, but civil legislation, there is nothing written, that means it is possible.
Why it is not applicable on FIIs?
So for FIIs, we have given an exemption because we want more institutional foreign investment to come to India. We want them to feel that we have ease of doing business before the coming at least. So that means we want to advertise it. That is why we have removed it. So this next is GST. GST as a topic is important for both prelims, mains, even probably interview also, because if you consider significance of reforms that have been done in India since 1990, probably this will come second only to 1991 reforms, because the kind of implications, structural implications it will have probably for next decade or maybe even 2 decades are significant, and in that sense probability of questions are high. Wherever you can say the weightage of this, you can say topic or importance for the economy is high. So you should have conceptual understanding of GST. So before GST we used to have something called as sales tax. Sales tax means whenever you sell something there is a tax on it. Imagine I will usually take on here as iron ore, you sell it 100 rupees worth of iron ore. Imagine government's intention is to collect 10% sales tax. On every sale 10% tax. Iron ore is sold, 10% tax, that is 10 rupees. Then this person who makes cast iron, he buys this iron ore, he will do some processing and he makes into cast iron. Cast iron is now 150. How much is value addition? 50 rupees. He has taken 100 rupees and added extra 50 rupee value. Why is it valuable? More valuable. Cast iron has some carbon has been added, it won't rust easily, it is more stronger. That is why it is valuable. People, it is more desirable. No, 10% tax on this 150 rupees is 15 rupees. Because 10% tax on every sale, it doesn't matter. Then steel maker will take it and he will add extra things and he will make it shiny and even more durable, etc. That means it is more desirable even more now. That means it is 200 rupees. On that 10% tax is 20 rupees. So you can see that finally consumer is paying this money. He is trying to buy this 200 rupees worth of steel, but he has to pay all in an indirect tax. Who finally pays the price? Consumer. This iron ore person has added this 10 rupees and sold it to cast iron. This cast iron person added his 15 rupees and his 10 rupees and sold it to steel person. And steel person added this 20 and 15 and 10 put together and sold it to the consumer, and consumer pays all this put together is how much? 45 rupees. What was the intention of government to collect how much percentage? 10%. But how is it collecting 45? Imagine 50 rupees out of 200 is how much? 25%. Why is it collecting so much when its original intention was only to collect 10%? Because multiple times, here actually 10 rupees, here on that 100 rupees also again they are taxing, on that extra 50 rupees also they are taxing. Here on that 100 rupees second time they are taxing, and then on 50 rupees first, you can say this 100 rupees third time, 50 rupees second time, extra 50 rupees first time. That means multiple times again and again and again if they keep on taxing, then the amount of tax that will be collected keeps on increasing. This is not the original intention of government, because you can say some sort of wrong method of calculating how much tax to be paid. Finally we were arriving at a big number of tax collected. When government inadvertently collects too much tax, what will be the impact on the economy? All the money is going where? Huge amount of money is going away from economy towards government. Less money is available with people. It is creating a vicious cycle in the economy. Here we have only considered 3 transactions. Imagine 10 have happened. Then 70% tax. Every transaction again and again you can say it keeps on adding. Amount of tax collected will keep on increasing. You understood this? This is what we call as cascading effect. To avoid this cascading effect, sales tax at state level was there, and in union government level also excise duty central excise used to be there, same. So central excise also similar to sales tax, on every sale it used to be there, name was different, that's all. That means whatever is union list, central government used to tax them, the name was different. Central excise on manufacturing, imagine somebody is making a car. If you buy steel, on that steel there is tax, on the car there is tax again. If you buy rubber, on rubber there is tax, on tires there is tax, on car there is tax again. That means what is happening? Cascading effect. You understood the meaning of cascading effect. Cascading effect increases price of a car, and this leads to lower disposable income. Disposable income means people have less money in their hands. If people have less money in their hands, they can buy less things, and this creates a vicious cycle. Demand reduces, vicious cycle is created. To decrease the price of the car makers, they felt that, see, everything let us manufacture on our own. We will make our own tires, we will make our own glass, our own steel, everything. But if Maruti company tries to make steel, will it be good at making steel? No, because steel makers who are making steel since 100 years, they have developed their own expertise and they are specialized in making steel, they will make better steel. If Maruti tries to make its own tires, then it won't be very smooth ride in Maruti car, because they will not be very good at making their tires. You understand? If everybody tries to make everything on their own, then this creates, you can say, poor quality products. And also economies of scale don't work. What is the meaning of this? Economies of scale means average unit cost. Imagine a company is making Maruti, if it makes car, tires, it will make only 10,000 tires for 2,500 vehicles. But if MRF is making tires, or Cello is making tires, they are making 10 lakh tires, 20 lakh tires per year. They are making in a order, 2 or 3 orders of magnitude more. When they are making that kind of scale, they are buying raw materials at a cheaper rate or not? They are probably directly buying it from rubber farmers or something. So that means you can see that they are able to buy raw materials at a cheaper cost. They are able to deploy large machinery which will actually bring huge amount of efficiency, and you can say at large scale when they produce it, the cost will be cheaper. This concept is called as economies. It is a microeconomics concept, but it is important nevertheless. Consider, for example, you buy some cookies, some biscuits in the shop. Consider Parle-G biscuit packet is some 5 rupees. You take that biscuit and you see how many biscuits are there, how many grams are there. If you try to exactly make the Parle-G biscuits at your home, is it possible to make it within 5 rupees? Then how is it possible that they are somewhere in Maharashtra, they make it and they distribute it and it comes to Delhi and you are able to buy it, everything, everybody makes a profit and still it is 5 rupees. That is because of economies of scale. You understood this? That means they are able to make it at such a scale that per biscuit cost will reduce so much that they are able to sell it to you at a lower cost. You understood the meaning of economies of scale. Similar to economies of scale, there is one more concept, economies of scope. Scope means if a byproduct is created from a company, In Kia factory is making cars somewhere in Andhra Pradesh. As a byproduct of making cars, they are creating 10,000 tons of scrap metal every day. Using that scrap metal, if they are making something else using that and they are trying to sell it, so that would be economies of scope. You understood? Imagine Amul Dairy is making dahi. Once they make dahi, the water will come out. Out of this water, they make whey protein. That is a byproduct that comes out of it, and that means using byproduct they make money. That is scope of products that they can create using all the byproducts. That is called as economies of scope. You understood? Scale means increasing the production scale. Scope means byproducts can also be used as raw materials to make something else and sell it. So in this case, if every company is trying to make everything on its own, then this problem will occur. This is a common recurring theme in economy. If you read any book properly, you will work maybe twice or thrice, then only you will recognize the theme. This theme you will see in barter system also. When you read about barter system, you will see that people are not very specialized during barter system. Why they are not specialized? Imagine you want to buy chicken in barter system. You go to the market and you say, I will give my rice and you give me chicken. That person is not interested in your rice. He has that chicken right there, but he is not interested to take rice. This is the problem, is called what? Double coincidence of wants. So you try to do all these things, but even though the product you want is right there, it is impossible to do. It is very difficult to do this transaction. So you lose trust on the market. That means you feel that even if I go to the market, there is only 1 in 10 chance that I will actually be able to exchange it. When you lose trust on the market, you will try to grow the chicken on your own, and wheat on your own, and rice on your own, goat on your own, everything on your own. When you try to do everything on your own, you are not good at anything. And that exact, you can say, same pattern is repeating. These companies are trying to do everything on their own now, and they are not good at anything. They are not good at you can say they are not making good steel, they are not making good tires. So you can see that this leads to the car, you can say, because economies of scale are not working, it is not even cheaper and it is not even better, because they are not specialized in making this car. You understood the problem here? The problem is every transaction is leading to increase in price of the car because of cascading effect. All the manufacturing entities, they felt that if we have to reduce the cost, we have to make our own, and they were not producing at scale. Because of this, they were not reaping economies of scale. The cost of it was not reducing. Cost has not reduced, the quality has also gone down. This was the situation. So this is the negative aspects of cascading effect. Everybody understood what is cascading effect. On demand side, people don't have enough money because all the money is going as tax to government. So people don't have enough money, this is demand side. On supply side, we are unable to produce good products because we are not reaping economies of scale, and also we are not specialized in anything. You understand? This is basically the impact of cascading effect on the economy. So we realized that we have to remove this cascading effect, and VAT was recommended. VAT means value added tax. So value added tax, now it is very simple. Tax will be 10%, but it will not be in the entire value of the sale. It will only be on the new value added, whatever is there in each transaction, only on that part. Iron ore was 100 rupees, 10% tax. Cast iron ore, even though it is 150 rupees, how much value addition has happened? Only 50. On this 50, 10% will be how much? 5 rupees. The steel person has added how much value? 50 rupees. That means again 5. If you add up this 10 plus 5 plus 5, how much is the tax? On 220 is how much percent? 10%. This was the original intention of government to collect 10%, and now they are collecting 10%. So they introduced this value added tax, and to solve this cascading effect problem, and we solved it to some extent. At least we have removed this cascading effect. It reduced the burden on consumers, increased disposable income, and created a virtuous cycle. In fact, when we introduced VAT, they had estimated it takes 5 years. By the time we will come back to normal, and they said we will give you compensation. Just like right now, GST compensation was proposed. At that time also VAT compensation was proposed. When VAT was introduced, there was no need to give compensation also within a single year, as revenues dipped, and before the year was over, overall revenues increased so much because of increase in virtuous cycle that happened, that central government did not give a single rupee as compensation to anyone. Everybody made profit out of VAT. You understood this? Because whatever this logic was, it worked. That means it increased virtuous cycle. People had more money on their hands and they started buying more items, and then more tax was collected. It was good for the economy, it was good for government, it was good for citizens, everybody. You understood the logic here. So it reduced burden on consumers, increased disposable income, virtuous cycle. Then there was one more problem. We solved cascading effect to some extent. One problem that we were facing was people were asking, I will give cash, I don't want bill, just give me a discount. And factories where what they were doing was, imagine some factory making a pressure cooker or something. They are making 50,000 pressure cookers per year, but they are only showing 25,000 to government and paying tax only on those. Remaining 25,000 they are just on the black market without any proof that they have produced it, they are selling it. So that there is no need to pay tax to government. You understood? So because of this, who is losing? Government is losing tax revenue. And to prevent this situation, tax evasion, to prevent tax evasion, we wanted to create some sort of a tax mechanism in such a way that it is impossible to do this sort of evasion of tax. So we came up with something called as input tax credit. What does it mean? In this case, input tax credit means, you can see there is business A, B and C. This business A, whatever it has produced, 100 rupees. When B buys this, what will happen is, you can say this, imagine A has produced a value of 100 rupees here. Whatever A has got it would have already paid tax of 10 rupees, 10% on A. Now imagine B wants to sell 150 rupees of worth of goods here. If B wants to sell 150 rupee worth of goods, it has added how much value? 50. How much is actually what B has to pay here? For 50 rupee goods, 5 rupees they have to pay. But government said, see, first you have to pay entire 15 rupees and also produce the bill that you have got from A. This is called invoice. Bill means invoice. You first give entire 15 rupees and also submit the invoice also. We will verify the invoice whether A has paid this 10 rupees. If A has paid this 10 rupees, then we will give that refund of 10 rupees back to you. This refund that they will get is called as input tax credit. You understand? Now because of this, what is the advantage?
Government can track the movement.
Because of this, imagine if you are B, what would you do when you are buying this product? You will say, give me the bill. If he does not give the bill, when you submit this 15 rupee tax, if you don't give the bill, then government will not give you any refund. This person, whatever he should have paid tax, you are paying it. You understood? Nobody wants to pay others' taxes. Nobody even wants to pay their own taxes. That means you can say, this person, what will they do? This person will make sure that he will get the bill from him or not. In fact, every person in this entire supply chain, they will make sure that they will get the bill from, invoice from the previous person. Now imagine from C's perspective, C will pay 20 rupees tax and he will take invoice from B, and that also he will submit along with his 20 rupee tax. Government will verify whether B has paid 15 rupee tax, and if he has paid it, then they will refund this 15 rupees back to this, you can say C. C in effect is paying only 5 rupees because he is getting a refund. It is like cashback. In your Paytm or something, if you buy something, you will get a cashback later, right? Similarly, input tax credit is given by government. And here we have created an incentive structure among people in such a way that everybody will always demand a bill from the previous person. And by doing this, we have reduced the tax evasion to such an extent, maybe 25-30% of tax evasion is now reduced because of this whole mechanism. But input tax credit created one major problem. People who are in unorganized sector, imagine B wanted to buy from unorganized sector entity who had no proof of existence at all. If they don't have proof of existence, they have not paid any tax. If they have not paid tax, who should pay tax? B should pay tax. And that means this created a barrier for unorganized sector to sell any goods to organized sector. And they were forced to either organize themselves, that means set up an industry and with proof everything account, or close down. That means this led to a shock in the economy where lot of unorganized sector already was under huge pressure because of demonetization. When GST came into existence, you can see both of them led to some sort of a big blow for unorganized sector in India. You understood this input tax credit? Any questions in input tax credit? So fake invoices means what they will do is there is a circular type of trading that is happening. So they will just keep on saying, and government will keep on giving, you can say, this input tax credit. So this sort of circular invoice is one type of fake invoice. They have tried to, you can say, somehow create under the company which has already paid tax. So they have identified whatever loopholes are there. There is always a, you can say, continuous type of upgradation that needs to happen in whatever government systems are, because people will try to work the system, identify whatever loopholes are, they will exploit it. This is circular type of trading is one type of, you can say, fraud that has been identified. Fake invoices is another type of fraud. So this whole thing is done by a software, GST network. Here if you make some person to sit here, then this will take years together. So that means it happens in seconds. Everything now you upload a, you can say, invoice and input tax credit is received within, you can say, few hours or something. So that means this whole thing is done through a software. There is a total IT backbone built for this entire purpose in GST network. So you can see each business has to pay tax received on output minus tax paid on input. Total tax that they have to pay is tax received on output, means imagine for B, they would have received 15 rupees, minus tax paid on input is 10 rupees. Their tax liability is that 5 rupees. To calculate tax liability, they use this formula. If you feel that maths you don't want to bring into it, then just think about it as a logical flow. Steel maker sells at 220 rupees, tax received on input is 20, tax paid on input is 15, so his liability is 5 rupees. But he will first pay entire 20 and then get back refund of 15 rupees. Steel maker has to first pay his tax on input, then he sends his invoice to government, government verifies, then you can say he will get back this 10 rupees as input tax credit. Everybody is clear with this input tax credit. Tax credit comes into a separate account. During VAT regime, it used to come into TIN account, tax information number, that was TIN account. Right now we have a separate account called GST India. GST India account is GST in account. This is the account into which you will get this, you can say, input tax credit. Just like Paytm wallet you have, similarly people who have registered with GST, they will have their own GST India account. Into that this input tax credit comes. This can be used to pay the taxes later. So this, so far we saw, first there was sales tax and excise duty, from there we shifted to VAT, and in VAT there was this problem of tax evasion. To avoid this tax evasion, we added the extra input tax credit. So then this mod VAT introduced input tax credit. LK Jha committee is the one who recommended input tax credit. Once you added to this VAT, if you added input tax credit, it was called as modified VAT, because now input tax credit is also part of VAT. It was called as mod VAT, modified. But services were not yet included. In India, services actually were not taxed at all initially. Very little amount of GDP used to come from services by 70s, 80s. In 1990s, services was not mentioned anywhere in the constitution also. If it is not mentioned anywhere in the constitution, usually what list will it come under? It is a residuary type of power. That means who will have power over it? Parliament. Union government, you can say, said service tax can only be imposed by union because it will fall under residuary list, and they started taxing it. And they added now services, and they felt that service and goods in other countries like Australia, they were showing success by integrating both goods services, treating it similarly. So we added services also into this VAT, and then it was called as sen VAT. Normal VAT, along with that when you added input tax credit, it was called mod VAT. To mod VAT, you added services, then it was called as sen VAT. So that means right now we had already addressed the problem of cascading effect, and then we had addressed the problem of tax evasion, and then we addressed the problem of integrating both goods and services also, and we had already created sen VAT. So we had sen VAT at center, and states also we asked them to remove all the sales tax and introduce state VAT, and they introduced state VAT. In 2017, we replaced all these things and introduced GST. But why should we introduce GST when all of these problems are already solved? There was one more problem left, which was, you can say, look at this example. Consider we are producing some particular product. We are producing some marble in Rajasthan, and we are using it in Tamil Nadu or something. Tamil Nadu or Karnataka. Imagine this marble is actually produced in Rajasthan and then brought to Karnataka and then it is sold there. If it is produced in Rajasthan and then it is coming to Karnataka and sold there, first Rajasthan government will, you can say, impose tax on this. And imagine some processing has to happen, all this processing has happened, now it is come to, you can say, Karnataka. Karnataka government, when they are selling it, imagine C is selling it in Karnataka government. C will say, first I will pay all the tax, I will show you my invoice. Then the invoice is sent to Karnataka government. Then Karnataka government will look at it and it will not find. B has not paid the tax to Karnataka government. Who did he pay tax to? To Rajasthan government, not to Karnataka government. When Karnataka government cannot find that B has paid tax, then it will say we will not send any refund because we have not received any earlier tax. You understood? That means right now there is cascading effect still in existence or not? When this cascading effect will come into picture? Right now. When any interstate trade is happening, when jurisdictional change will happen from one state to another or sometimes center to state, state to center, in all these cases also when government changes in its jurisdiction, then when they try to verify whether this person has paid tax to me earlier, then he would not have paid it. And then any interstate trade that is happening, it created a cascading effect. You understood? And we realized that if we have this sort of cascading effect in interstate trade, the product price will keep on increasing as the number of states that it passes through keeps on increasing. And marble that is produced in Rajasthan, if you buy it in Tamil Nadu, it is more costlier than importing from Oman directly, importing from China directly, because so many times tax has been imposed. So more imported goods people are buying rather than India's own goods. And that means we have to solve this problem. We have to create a total, single structure of one tax throughout the entire country. One nation, one tax. One nation, one market. Here fragmentation of markets have happened because of, you can say, so many different taxes. If we create GST as one tax, it doesn't matter where you produce, where you sell in the entire country, there will be only single tax imposed only once. Then imagine Rajasthani marble, right now it is sold in Rajasthan and surrounding 2 or 3, 5 states maybe. It is not sold in Kerala, Tamil Nadu. But if we implement GST, will it be sold in Kerala and Tamil Nadu also or not? Because the tax that will not be too much. We can sell. What happens to production of marble in Rajasthan? Instead of selling to 5 states, it can sell it to 25 states now. And that means 5-fold increase probably is going to happen, you can say, in production. This is only one product in one state. Imagine, you can say, all the products in all the states. Now there is potential to sell these products across the country or not. That means we have created a big market size for every producer in the country. You understand? We try to identify what exactly is the problem. How big of a problem is this for interstate trade? And we found that more than 50% of products in India are actually produced outside the state, whatever is being consumed. That means 50% of cascading effect was still there before GST was introduced. And if GST is introduced, that 50% or whatever is more, we can remove that entire cascading effect. That was the intention of introducing GST. So here another example, tax on crude oil extracted at Bombay High. Tax on exclusive economic zone, whatever we are extracting, only center can tax it. Center has already taxed it. Imagine this person, whoever produced it, they bring it into Mumbai. In Mumbai again Maharashtra government will tax it because center has collected tax, state government so far has not collected tax. You can see cascading effect again. Whenever government to government jurisdictional change happens, there is tax, and that is cascading effect. Once refined tax on diesel petrol by state, no input tax credit because jurisdictional change. So this is leading to cascading effect and we want to remove it. So what we did was, we wanted to create a totally new tax system. We merged together all the state VAT, center's VAT, everything, and we created GST. In GST, we made, you can say, 2 types of GST, SGST and CGST. SGST, CGST means, we already know in 7th schedule there are 3 lists, union list, state list and concurrent list. Whoever can tax, you can say, whatever is there in union list, union government can tax, that will be there in CGST. Whatever is there in state and concurrent, usually state government can tax it, that will be there in SGST. You understood this? If there are exceptions in the law itself, it will be written, then center will tax. But generally, state will tax on whatever is there in concurrent list and state list. So that means, CGST, SGST will be on different processes. In fact, actually, if marble finely polished marble that is there somewhere in your home, it is there, then some 35 processes have happened already, out of which 20 are taxed by center, 15 are taxed by state. That means all the products to manufacture it, all the processes that have involved, both center and state would have taxed all these processes. That means almost all the products include both CGST and SGST to produce them. You understood? How to decide what is taxed by center and what is taxed by state? It is written in this 7th schedule itself. So whoever has made laws on that particular subject, they can tax it. You understood? So we have SGST, that is state GST, CGST, that is central GST, and there is no cascading effect, because now input tax credit in this GST will be given even if it is, even GST if it was paid to center earlier, now we are showing it to state. It will verify which center has he paid to you, and center will accept, yes, we have received the payment, then the input tax credit is given. You understood this? State and center provide different input tax credits, however. That means, imagine once it goes to Karnataka state government, right now this marble they will verify, they will talk to, this software will talk to Gujarat state government software, and there they have received their SGST part already. So, I mean Rajasthan has received it, so they will send a message to Karnataka. Karnataka will give input tax credit, but this Karnataka's input tax credit later has to be paid back to Karnataka government only. Okay. So there is interoperability issue here. That means whatever input tax credit has been received from center, you can only pay back to center. Whatever input tax credit has been received from one state government, you can only pay to that state government later. Imagine you get cash back from Paytm. You cannot use it in Amazon Pay. You can use it back in Paytm only. And same way in Amazon Pay, you have to use it in Amazon Pay only. This is how they have created. There is no interoperability between all the, you can say, states, whatever they are sending you cash back, and center, whatever it is sending you cash back. You understood this?
Sir, so the only difference between VAT and mod VAT is the introduction of the input tax credit.
VAT and mod VAT, yeah. Major change is this only. But other things, if they have added, I don't know. As of now, what is important for us is only major change is this one. So, one more major change that happened. Imagine right now only one state can tax. Either source state can tax, Rajasthan can tax, or Karnataka can tax. If both of them tax, what happens? Then there is cascading effect. If you have to remove cascading effect, then only one state can tax. How to ensure this? We can ensure this by making it a destination based tax. We can make it source based tax also, but if we do that, then there is no way to convince destination based tax, state not to tax. Karnataka will definitely tax because they are not getting anything. But at least Rajasthan is getting something by selling it in, you can say, Karnataka. Who is getting the income? People in Rajasthan are getting it. When people in Rajasthan get income, what do they do with that money? They will consume something. When they buy something there, that means, you can say, Rajasthan state government will get that part of money or not. Wherever consumption happens, that state will now get the state GST. That means it is a consumption based tax. Instead of source based tax, we have made it a consumption based tax. Wherever a product is consumed, imagine this marble when it is sold, tax is collected. Imagine 100 rupees tax is collected. 50 rupees is CGST, 50 rupees is SGST. CGST 50 rupees center will take it. SGST 50 rupees, who should get it? Consumption, which is the consumption state? Karnataka. So Karnataka will get it. You understood this? So then what is IGST if this is the case? What exactly is IGST? IGST is not a new tax. IGST is just bundling up of CGST, SGST together. Why do they do it? When the truck leaves with all this marble in Rajasthan, they don't know where they will be able to sell it yet. Even the seller doesn't know, government also doesn't know. So what they will do is, central government will collect both the CGST and SGST part and keep it with itself until we know who is actually the destination state. Because central government is collecting both CGST part, SGST part, it is bundled together and it is called as IGST. You understood this? So this IGST will work only when interstate trade is happening. When a product has to move out of the state, we don't know yet where it is sold. Imagine from Rajasthan it goes to Mumbai and they will try to sell this marble in a showroom. Half of it is sold. Then for that part, half of it, who is the destination state? Maharashtra is destination state and central will give CGST of that part to Maharashtra. The remaining marble will sell from there, they will pack it up and they will bring it to Bangalore. And in Bangalore they will try to sell it. Then it will be sold. Now for this part, which is the destination state, then it is Karnataka. So for that part, SGST is given to Karnataka. You understood? So until it is given, they are just holding it in the form of IGST. IGST is not another type of tax. There are only two taxes, CGST and SGST. Bundling together and holding it for the center for convenience to decide who should we give it to, that is called as interstate GST. You understood? It will be applicable only when interstate trade of these goods happen. That is the meaning of IGST. When it is exported to international market, then you can say who will pay the tax, you are saying. Whoever is the exporter, that is the final stage in India. They will sell it along with tax, they will sell it to, you can say somewhere from outside the country, they will receive the money. It can be applicable until you sell it to the exporter. After that, customs duty, if it is there, it will be applicable, otherwise no. Whoever is the exporter who will buy it, that person is the consumer for exportable products. You understood this? Yeah.
IGST, it is also अगर इंट्रास्टेट हो रहा है तो उसमें सर कहीं ना कहीं जो मैन्युफैक्चरिंग सेक्टर है जो स्टेट है मैन्युफैक्चर करने वाला कहीं ना कहीं उसको सर घाटा नहीं हो रहा, लॉस नहीं हो रहा क्योंकि
Yes, there is a loss to manufacturing state here or not. Earlier, Rajasthan also used it to impose tax on this marble, but right now it cannot impose tax. If it cannot impose tax, will there be a loss to Rajasthan or not? Yes. But somehow, after taking 10-15 years time and convincing all the states, they have agreed that fine, we will agree to lose this tax if you give compensation for 5 years. So GST compensation was given for 5 years. Central government said whichever states are going to lose revenue will give for 5 years. But once GST comes into picture, what will happen to marble production in Rajasthan? It is going to increase, it is going to become very high. That means all the people in Rajasthan, whoever are in marble industry, they are going to earn massive amount of money. When they earn money, will they buy goods or not? When they buy goods, will Rajasthan become a destination state for all these goods produced in all the other states or not? And that means where will that state GST go? It will go to Rajasthan only. That means you can say there may be a delay for 2 years, 3 years, it may take time, but then finally Rajasthan will start receiving the state GST because of consumption of other goods, because they are going to earn more money by production of goods. You understood this? So this is what they said, and they said for 5 years we are going to give you GST compensation. And 5 years they thought similar to VAT, in now also 1 or 2 years automatically it will be you can say incomes will rise. But the problem is they estimated normally you can say VAT was going to rise like this. They thought GST will reduce a bit initially and increase it like this more than VAT after 3-4 years. But what actually happened was GST had already reduced the revenues. Then here COVID happened, and when COVID happens you can think of what will happen to revenues. From here it came like this instead of going up. When it came like this, then all the states said you have to give compensation for this entire thing, because they said this is the line, this much we are going to give. Then central government said for COVID we are not, COVID is an act of God, not act of central government. So GST only is act of central government, and for that we are going to give this much, whatever the earlier graph was there, this much will give compensation. But some states, Telangana especially, was very vehement that we have to get this compensation. Center said we cannot give compensation, but maybe we will ask RBI to give you a loan, then you take this much, whatever money is you are losing as a loan. Now states have taken this as a loan, not exactly as a compensation. You understood this? So producer states have lost revenue, and because of COVID this loss has not been recovered so far. Probably by 1 or 2 years it is going to take more to be able to recover this loss completely. You understand? So earlier In interstate trade, center used to collect central sales tax and pay this to exporting state. Earlier, before GST, exporting state used to get the money, and that is why it was very difficult to convince all these states to agree to GST, because now they are going to lose revenue. GST took all of 10, 11 years, 11 times they introduced in parliament, it could not be passed. You can see that means it is a very big reform, and also it is in a long time type of reform. We took 10 years by the time we worked out all the details, you can say, to introduce this. That is depending upon, you can say, in that what is the proportion. In a particular product it could be mostly only central GST, in another product it could be 50-50. So depending upon what the product is, it will differ. How much of the process of this product is present in 7th schedule, in union list, in state list, that is what decides how much is collected by center and state. So importing state also taxed these goods, creating cascading effect. Now we have IGST, it is not a new tax, but bundling up of CGST, SGST, collecting it together for simplicity. So that center can decide who should get this, that is the destination state where consumption actually happens, that state will get it. So this is a destination based tax on consumption. So wherever consumption happens, that state will actually get this GST. You understood the concept of GST? Any questions in concept so far? Yeah. State and center provide different input tax credit, they cannot be cross utilized. So that means center will give its own input tax credit, which you can only use to pay to central tax later, central GST later. You cannot use that input tax credit to pay any state's, you can say, GST. Okay, iron and steel. Okay, imagine total tax paid is 20 rupees. Final GST that is paid by the consumer is how much? 20 rupees. This 20 rupees is split into 10 rupees state GST, 10 rupees central GST. Imagine this person, the seller, whoever, he is going to get 15 rupees, you can say, back, right? Out of this, imagine 10 rupees is SGST and 5 rupees is CGST. For simplicity, let us consider it like this. This 10 rupees SGST, whatever he has got, he can only use it to pay back this to that, Maharashtra government or so. He cannot use this 10 rupees to pay central tax, central sales tax, central GST. Right now, this 5 rupees, whatever he has received as central input tax credit, he can use to pay next time, next month he will pay GST again. During that time, this input tax credit can be used to pay only central part of tax.
They both run parallelly, input tax credit and GST.
Correct. So they both run parallel, you cannot cross utilize, you cannot mix them up. That is basically the issue. So, any other questions?
Sir, is octroi tax still there?
Octroi tax, it is not there right now. When they introduced e-way bill, e-way means, there is in GST there is this e-way bill. Once you can say they load the goods into a truck or something, from GST portal you can print an e-way bill. It will have QR code and the source and destination and verified by some officer, everything will be present. And once it is pasted on a truck, no person until it reaches the destination, even in RTOs or city limits or octroi, all this, nobody can stop it, nobody can collect this tax. So octroi has not been explicitly removed. Because of e-way bill it has become redundant. That means it is not allowed to be collected. You understood this? So this so far whatever we have discussed is concept of GST. That means this much is only the concept. Remaining things are some analytical aspects about GST and compensation and all the other things. This we will see after break. Welcome back everyone. So we are discussing GST and we have seen concept of GST so far and some analytical aspects of GST are remaining which we have to discuss. Any questions so far? Someone has asked a question. In GST we have only one account, that is GST in. How we will use different account for different states? Account is same, the input tax credit that can be utilized is different. That means into the same account you will get central input tax, Rajasthan state government input tax and Karnataka state government input tax separately, and they will keep getting added. So then you have to use that only to pay only to that government. So any other questions? No questions. Everybody is clear with GST? So coming to, because we moved to destination based tax, there were some problems. First, manufacturing states will lose revenues. Because of this reason, like I said, center said we will compensate for 5 years. So 5-year GST compensation was planned, and for that they even created a cess for that purpose. We already saw what is a cess. Cess is created for a purpose and it is tax on tax, and you can say it can only be collected until it is done. So all these type of things. For GST to pay GST compensation to state governments. This was the purpose of GST compensation cess. First thing. Second thing. Now every state what it has as an incentive right now will be to increase consumption in the states, because now the incentive is not for production, because production is not going to increase tax collection. Consumption will increase tax collection. So imagine every state is trying to increase consumption and nobody is actually trying to increase production. More consumption without production will lead to what will happen here? This is going to create inflation, because all incentives, all the, you can say, push that we are going to give is towards consumption, because state is thinking about how to raise revenues, and that means it will create some sort of incentive structure to increase consumption. So in the long run, this is not good for, you can say, economy, because it has inflationary tendencies that are built into this whole incentive structure. Then how we have planned this GST compensation? First, they said that first 3 years will give you 100% of the compensation. That means whatever is revenue is going to be lost. 4th year 75%, 5th year 50%. And for that purpose, they said we will create a GST compensation cess. Under this, you can say whatever we are going to collect, we will give you that money. GST cess is levied both on intrastate and interstate supply of goods. So intrastate means even within the state, if a product is produced and consumed, then also GST compensation cess was collected. And you can say even if it is going outside the state also, then also it is collected. So for loss of revenue, it will be used. GST compensation cess would be for a period of 5 years. Right now this 5 years is already over, first thing. Second thing, center has calculated how much actually compensation has been paid to states so far, and that is maybe, let us assume 100 rupees. Then they calculated how much GST compensation cess has been collected so far. That was some 60 rupees. That means center has actually out of its own pocket paid extra money apart from the GST compensation cess. You understood so far? Because of this reason, what center has said is, although you can say GST compensation cess payment period is over, we will continue this cess now until we recover this entire remaining 40 rupees, whatever we have already paid to the states. You understood the logic? Ideally, what should have happened to GST compensation cess by now is it should have stopped, but they have not stopped it. Why they have not stopped it? They are trying to recover the money that they have already paid to the states as compensation. That is why even though the period of GST compensation cess is over, still it is being continued. It will continue until they recover that much of money that they have already paid to the states. You understood this? So right now we still have this GST compensation cess because they are trying to recover this money. That is, you can say, second thing. If the funds from GST compensation cess are unutilized, this scenario did not arise, but in the beginning they thought of all the scenarios and this was one of the scenarios. When would they have been unutilized? What should have happened for them to be unutilized? The revenue should have increased so much that there is no need for giving compensation. What happened during VAT? At that time everything in the economy, everything else was very good, and so we did not face any problem and revenue increased. But right now we are in the middle of multiple crises, and that means revenue did not increase, so cess had to be given. This did not arise. They thought that if we have extra money and we don't have to give compensation, then let us divide among state and center equally. That was the provision, but this, you can say, situation did not arise. It applicable on tobacco products, aerated water. He full list of what it is applicable on. 135% for pan masala, 400 per ton for coal. This 400 per ton for coal, whatever is there, this was there earlier itself, but right now it has been put into GST compensation cess account. This was created by Chidambaram when he was finance minister. What he thought was, we can add, because it is a green tax. On coal, if we are adding tax, what is the intention? To reduce consumption of coal. So we thought that first actually 200 rupees per ton of coal was added, then 400, then they felt that we will keep on increasing it. And when we keep on increasing, the coal fired electricity charges will keep increasing. Whatever we collect as tax, we will use it to, you can say, subsidize renewable electricity like windmills and solar panels, etc. And at one point, what happens by doing this is, so you can say renewable energy will become cheaper than coal fired energy. When that happens, people will automatically start shifting towards renewable energy. Government need not do anything. This was the original goal. Before 2012, actually this was the goal. After 2012, financial crisis in Europe, and all the consequent expansionary fiscal policy that happened, we realized that we cannot use this money for that, and we kept on using it for expansion. That means we just kept spending that money in the economy, and that is why even though this was the original goal, we have not been able to do it. And as of now, we have fixed it at 400 per ton. We are just using this money as GST compensation cess fund so far. Then we saw on 1000 stick of soap, tobacco, whatever extra charge have been levied, that is also added into GST compensation cess only. 15% for all goods and services, including motor cars, aerated water, everything else, 15% cess is added. Cess means on tax on GST, tax on tax. So some taxes have not been included on GST, only examples I have given. Custom duty is not included in GST. Stamp duty for registration of property, excise on liquor, petrol, diesel also excise. These things have not been added to GST. But the long-term goal for government is to add them into GST. Sometimes you might have seen in newspapers, GST Council brings up this conversation to convince the state somehow to bring some things into GST. In the long run, their goal is, except for a few which we deliberately keep outside GST like customs duty and such, we should be able to change it separately. Other than that, all other indirect taxes should be included into GST is the long-term goal for GST. You understood this? So this is with regard to compensation. Coming to grandfathering clause, we just discussed about service tax. It did not exist originally, and then it came into union list because when services came into picture in 90s, services started becoming major source of GDP for India because of the emergence of internet. And at that point, center felt we should tax it, and we started taxing it. It was called as service tax. Service tax used to be 12%. Center made law on it, center collected the tax, and it was center's money only, because residuary means it is center subject. So when center created this law, central government felt that there has to be some exemptions in service tax for some particular services which we feel are important for society and we should not tax them. And exemptions were given for agriculture, education, healthcare, sports, etc. On these services there is no tax. And so when service tax was introduced, they exempted these taxes. So you can see totally 83 services were exempt. Then these service tax, if you remember, we just discussed, this was merged into SENVAT. So when it was merged into SENVAT, the same exemption list, whatever was there, 83 services, they gave the same exemption in SENVAT also. And now this SENVAT has been converted into GST, and in GST also we are giving exactly the same exemptions of 83 services whatever were there, you can say, since service tax. Service tax is the grandfather, SENVAT is the father, and GST is the son or daughter or whatever you can consider it. You can see that from 3 generations of tax we have the same list of exemptions, and that clause has been borrowed as it is from grandfather. That is why it is called as grandfathering clause in GST. You understood? Yes, even if it is provided by private sector, it is still exempt. For example, consider education as a service. On the college tuition fee that you pay, school fee that you pay, there is no tax. What you pay to Insight is different. Insights is different. That is called as education services. That is a different list subject compared to education itself. You understood this? Whatever is government registered college, school, all these things, there is no tax on that. That is education. Then healthcare, whatever consultation fee you pay to hospital, on that there is no tax. But in the hospital, if you buy, imagine somebody is admitted, they buy food, some gloves are bought, these things are different. They are products on which there is GST. You understood this? So sports also, that means if you buy some coaching for sport or something. So long term goal is of India, agriculture we want, food security is important, health and education it is important because of building human capital in India is important. Sports we ultimately want more gold medals in Olympics. So these are all long term goals of India, and that is why we have given exemption for, you can say, this earlier service tax, now GST exemption is given. That is what is called as grandfathering clause. Services by government, local bodies also are exempt, and you can say 83 services totally exempt. Why government services are exempt? Because if one government giving service and that is taxed by another government, between government itself money is exchanged and there is nothing else happening in the economy. So we felt that it is not useful for anyone, and for whatever government services are there, that is also exempt from taxation. Coming to GST network, like I said, it is the IT backbone, technological backbone that runs GST in entire country. GST is a non-profit, non-government. It used to be non-profit, non-government. Then in later what happened was, Puttaswamy judgment came to picture where privacy became a, you can say, fundamental right under Article 21, dignified life. Then somebody, Subramaniam Swamy in parliament, he brought up this issue, said that if it is there under a profit making entity, or you can say outside government, even if it is a non-profit entity, if it is there outside government, all this data of people, what they are buying, people's consumer behavior and all the personal data of people will be available to a private entity other than government, then that is a violation, possibility of violation of privacy. And that means right now you can see 2018 Union Cabinet cleared a proposal to acquire stake of GST, and that means right now they want to buy out entire GST and back into government. Then so government has cleared a proposal. So far execution is not complete yet, but they will buy out entire GST and government will only hold it. Why they gave originally to then non-profit? For better efficiency. Government does not really have a good track record of maintaining, you can say, this online services and such. You can see in IRCTC website or SBI website, you get the same frustration that you go in SBI when you get it, they will get on a website also. That means you can see they are not very user friendly. To make it, you can say, much more resilient, they wanted to give it to non-profit, but we have other problems like, you can say, privacy, and that is why we are not able to do it. But right now already building of this entire GST and everything is over. If government takes over also, they will give contract to maintain it properly, but ownership will be there with government. No, it is not allowed to sell personal data, they cannot sell it. Private means a non-profit is created by using multiple banks and such, they all come together and they will create this non-profit. It is not, I think it was Payments Corporation of India and others, they will all come together and they will create this non-profit. Some such provision was there, but right now half of it will be owned by center, half of it will be owned by states. This will be the future of GST. Coming to anti-profiteering clause. So ideally, now that you understand the concept of GST, once GST is implemented, what should happen to the prices of products? It should reduce 50% of cascading effect. If you remove it, then product price should actually reduce. In fact, 50% of the products at least should reduce in price. But immediately what happened once we implemented GST was, about in 80% of the products they increased the prices. They claimed that because of GST all prices have increased to people. But they used to claim this and they used to sell it at a higher price. Because people don't understand what is GST. GST officials themselves took 1 year by the time they understood entire GST properly. So that means it was not a simple type of legislation. It was a lot of complexity is present. Because of this reason, it was very difficult for common man to understand about, you can say, GST. This led to a situation where people were cheated by businesses. They were claiming that the prices have increased. For example, imagine before GST, if you buy a thali worth 100 rupees, tax was some 10 rupees. Imagine 110 rupees they used to sell it. Right now actually GST on thali is only 5%, but they have increased the price itself to 120 rupees and tax is, you can say, extra 5%. Why they have increased 20% if you ask them, then they will say because of GST everything is costly. You understood? Actually for them everything has become cheaper. The raw materials used to cost maybe 50 rupees, now it has become 40, but you can see they are trying to take bigger profit. This is called as profiteering. And profit to prevent, if we have profiteering in 80% of the products, will there be any impact of GST? No, in fact we will not see any positive impact of GST at all because of profiteering. So we realize we have to take action against this. Anti-profiteering clause was introduced into the GST Act itself. An anti-profiteering authority was created to ensure the businesses will pass on the benefits of reduced tax to customers. Because the taxes have reduced, whatever the benefits that businesses are getting, consumers would finally get it. So that is the intention of anti-profiteering authority in GST. So the prices go down and aggregate demand will increase. Government takes penal action if they don't do it. That means imagine you found that profiteering is happening somewhere, you can call up this anti-profiteering authority and you can tell them that this is happening. They will investigate it and impose penalties on these businesses. You understood this? This is the meaning of anti-profiteering clause. So this is end of GST. Any questions on GST?
There was news that this authority is winding up and Competition Commission of India will take up the
Yeah, so this anti-profiteering will only work for few years after GST. Now we felt already more than 5 years is done, and right now understanding of GST is better. And because of competition, usually prices will reduce because imagine this thali is being sold by 100 restaurants. Out of this, if all of them are increasing a price using some sort of a cartel, understanding among them, then only it will sustain. If imagine 3 of them actually reduce the price back to 90 rupees, whatever used to be 100, then what others should also reduce or not? If they don't reduce, all the people will go here, and that means competition will ultimately reduce this. To reduce the time between, you can say, competition operating and implementation of GST, we implemented GST, you can say, this whatever anti-profiteering clause. Now we felt that it's been enough time and right now there is no need for anti-profiteering. They are going to wind it up, but right now I think it is still there. There is a from December they are going to, okay. So then competition, recently there was a Competition Commission of India, there was an amendment act in that also. So they will take over and they will make sure that there is, you can say, competition in India. This is agriculture service means services provided to agriculture. Consider for example, for improving productivity, some private company will say you can use our app and get details about, recently somebody has created an AI app for agriculture. You take a photo of a pest, then it will identify what type of pest it is, what you should do with regard to it, what you can add to the field to prevent its further spread or something. So then they will show where it is available, all this information. For this, farmer will pay some 2000 rupees per year or something as subscription. On that there is no tax. Why we have removed this tax? Because who is ultimately benefiting because of this? Farmer, and that is why we have removed tax. You understood this? Yeah.
criticisms of GST, are they mostly political in nature or are there any real substantial?
So in the long run, GST is in general good. Criticism is one. Major criticism is ultimate goal of actually implementing GST was to make taxation regime simpler, but there is still huge complexity in GST. Right now we have 4-tier structure in GST. One is 5%, 12%, 5%, 12%, 8%, 18% and 28%. 4-tier GST is what we have. If you see in Singapore and Malaysia, they have only 1 tier. GST means only 7%. I think in Singapore it is 6%, Malaysia 7 or something. That means it doesn't matter what you are buying, always 7%. So they have such simple type of tax system that implementing it is easy, paying it is easy, everything is very simple. But in India, why we have created so many tiers is we wanted to bring a progressive element into regressive tax. GST is indirect tax. Indirect taxes are what type of taxes? They are all regressive. But what we felt was, we have created a zero also as one of the, you can say, tax. In this, what we had zero taxes, some basic necessities, rice, wheat, vegetables, milk or something will be added into zero tax. 5% tax, whatever are basic necessities for poorer sections of society, we will add it there. 12%, 18% middle class services, everything will come there. 28% which are luxury goods will come into that. So we felt that we can make this regressive tax also in such a way that rich people will pay more tax compared to poorer people. That intention is good, but the associated complexity is still very high, and there is a because of this complexity we are not even able to implement you can say completely in a proper manner also. And also there is lot of politicization here, whether something should fall under 12%, 18% will finally become a political decision. Sometimes there was a debate about whether munch should be declared as a chocolate or a biscuit. That means if it is a chocolate, then it is 18% GST, or biscuit it is 12% GST or something. Imagine if it is one or the other, who will decide it? Is some GST council will decide it. If they give enough bribe, maybe they will decide it. We don't know. I am just giving a you can say example, hypothetical example. That means there is a possibility of corruption and politicization. And also you can see lot of lobbying is still happening. There is no stabilization of which category it should fall under so far. They are changing it consistently. One more criticism was, to this criticism a solution was proposed. Instead of 4-tier structure, 3-tier structure can be created. By merging together this 18% and 12%, we should create a 15%, at least unnecessary complexity of 4 can be reduced to 3. But there is one problem with this. In India, GDP, highest GDP is coming from which sector? Services is giving us 70% GDP. Which one of these categories will it fall under? Which GST? 18%. All services are charged 18% GST. Imagine 70% tax we are collecting it from here and we reduce it to 15%. What happens to our total tax collection? It is going to reduce. That means there is one problem there. So to address this problem, the suggestion was increase this, you can say 5% to 8%, 28% to 30%. This is the current proposal, but there has not been any serious action taken to reduce this 4-tier structure to 3-tier structure. You understood this?
So they are like 3.5 something for jewelry?
Yes, some of them they have created extra, even about 28 also they have created, but majority of the products, probably 98% of the products will fall under only these 4 categories. You understood? Other criticism are general. One of the criticism was there was no women representation in GST council. No finance minister was there in the entire GST council. Right now they have added Nirmala Sitharaman as head itself, but otherwise earlier there was none when Arun Jaitley was heading it. Then there was an issue on sanitary napkins. They were charged at 18% GST, and though they said GST council is not sensitive to the needs of women, they are considering what is actually a basic need as a luxury, and this became a, you can say, a huge issue. So these type of criticisms are present. These are all, you can say, temporary. We can change them. They have changed it now back to 5% or something. So that means these are not big problems. They are like GST council has called them as teething problems. That means initially when a baby is getting teeth or something, whatever problems are, these type of issues, once it is, you can say, mature enough, then it will not, all these type of problems will not exist. You understand? So any other questions? No questions. Yeah, you can say that value addition, whatever is there. Imagine the product is charged at 0% GST, this product, but the raw materials have been charged at 5%. Imagine raw materials are worth 100 rupees, this product is worth 150. Only on this extra 50 rupee value addition we are giving exemption. On that 100 rupee whatever is there, that we can't do anything, it will be added.
Can the producer claim ITC on
Yes,
this?
they can claim it. They can claim for this, but anyway they are not collecting there, this 50 part, that part is, you can say, there is exemption. So Next, we'll see a little bit of budget today. Budget 23-24, I have given some facts related to budget. They are not going to ask you any facts directly, but if you know this, it will help you in identifying, eliminating some options. So it is better to know these facts. You don't need to know too many facts, only these whatever I have given here. They are important to be able to identify options in exam. Total expenditure that we are spending is 45 lakh crores. Revenue expenditure is 35 lakh, capital expenditure is 10 lakh. What is the difference between them? Revenue expenditure means it is not affecting assets or liabilities. We already saw. Capital expenditure 10 lakh crore means we are either creating some assets or paying back some loans. As of now, we are not in the situation where we are paying back loans. That means all this 10 lakh crores is going for creation of some sort of assets in the economy. And fiscal deficit, we already saw all these deficits, what the meaning of these deficits are. So the present number of this deficit, you can try and remember what it is. Context for this budget. Last year was Azadi Ka Amrit Mahotsav, that is 75 years since independence. They celebrated 75th year. The next 25 years before India becomes 100 years old, this is called as Amrit Kal by government. And in the next 25 years, you can see we have taken up some goals that we have to achieve in the next 25 years. This will be the first budget in this Amrit Kal. So they have given in different, last year's budget they gave different goals for Amrit Kal, and this year's budget they have given different. So whatever is most recent, that I have just added only this year's budget to avoid confusion. That means whatever they have said about Amrit Kal in this budget, only that part I have added here. They have given Panch Pran of Amrit Kal. So 5 you can say goals, you can think of it as goal of developed India. Next 25 years we have to become a developed country. Why next 25 years is going to be important? Demographic dividend. What is the meaning of demographic dividend? Percentage of population who are relatively young, that means in working age, they are much more than you can say older population or very young population in India. This means you can say, imagine in a family there are 6 people, in another family also there are 6. In this family 2 are young and 2 are very old and only 2 people are working. Whereas in this 5 people are working and only 1 person is old. Which one will be wealthier? A is wealthier or B is wealthier? A is probably wealthier because many people are working, they are going to earn more income. And India is right now in that stage and it will continue for another probably 25 to 30 years. After that India will also slightly become an older, relatively older country. And at that time it will become like, slightly difficult to, you can say, earn much more income. So right now we have to be able to make use of this opportunity that we have, that is demographic dividend. So that is why the next 25 years are going to be very important for us to, you can say, become a developed country. Then remove any trace of colonial mindset. This is some sort of attitudinal change that is necessary. So colonial mindset means we have adopted exactly laws as it is from Britain or USA. Even now also we still have it. We don't sometimes maybe notice it. In Parliament itself, when they have to say yes to the law, they will say aye and nay from British Parliament exactly as it is. So that means this change is more in the lines of Swadeshi type of mindset. Take pride in our roots. They have not said exactly what is the action item here, just you can say this is only what we feel inside. Then unity. For unity, earlier they have created some schemes like Ek Bharat Shresth Bharat, or you can say improving tourism within the country, increasing acceptance of, you can say, our own diversity in a different manner. So exposure to diversity through transfer programs in schools and such other things. Then sense of duty among citizens. This also is just a goal. We have not created any concrete action items to be able to achieve this goal so far. Maybe they will do it later. Then what is the vision? Opportunities for citizens with focus on youth. That means we have to create more and more opportunities for youth because same demographic dividend is, you can say, as of now we have to be able to utilize it. Growth and job creation. This ultimately is the final goal everywhere. Growth means GDP growth. Job creation means once we have this growth, to convert it into development, we need employment. Already told you that to convert growth into development, we have 2 possibilities. One is employment. Second is government itself does redistributive policies, taxes rich people and redistributes among poor. Then only we can convert growth to development. If you see syllabus, or in fact why it is given in syllabus is because government's final goal is development, it is not growth. Growth is only intermediate goal. Once we achieve growth, then we have to convert to development. That is the final goal. What exactly is the meaning of development?
Qualitatively positive growth.
Development means people qualitatively, subjectively, people should feel that my life is now better compared to maybe 5 years ago. My life has improved. Then it is, you can say, development. So growth and job creation, strong and stable macroeconomic environment. Because we have faced a lot of problems in the last 10 years, we want to create, you can say, a better macroeconomic environment. Means the variables of macroeconomy are debt to GDP ratio, fiscal deficit, GDP growth of the country. All these are macroeconomic variables. We need to improve upon these, taking better fiscal decisions, more prudent decisions on, you can say, financial aspects will lead to better macroeconomic environment. In the next 25 years, we should be in a much better financial position. This is basically the vision of this Amrit Kal. And they have identified 4 transformative opportunities to be leveraged before reaching this India at 100. First is economic empowerment of women through self-help groups. In India, probably everybody knows about the self-help groups. In southern India, self-help groups are much more successful, especially in Kerala. They are successful in those most of the states where patriarchy is relatively less, or you can say power distance between genders, women and men, is relatively less, where families are, you can say, there is no restriction on women to create their own groups and take loans and make their own financial decisions. It has been successful. So as it comes towards, you can say, from Kerala to Andhra Pradesh, Tamil Nadu, Karnataka itself, slightly reduction is present. In Kerala, it is more egalitarian. And as it comes more and more towards north, its effectiveness has reduced because of inherent, you can say, patriarchal type of entrenched mindset that is present. So what we want to do is, there has been recently within SHGs, there has been some sort of training given to women where they will become assertive. That means we are trying to fight patriarchy itself using self-help groups. So using that, we will may be able to, you can say, do social change also, economic empowerment of women also. Everybody knows how self-help groups work. So originally self-help groups were created actually because it was leading to easy, repayment of loans. Self-help groups will create some sort of a peer pressure among all the people. A collective loan is given to around 10 women, and these 10 women, they will do some small business. Imagine they buy 2 cows using this, and they will divide work among themselves. 10 women, 2 cows means, imagine only 3 days in a month they have to take care of the cows. So that means whatever income they get, they will divide among themselves. So when they have to pay back this loan, if 7 women pay back and 3 women are not paying back, then they will not give a new loan for the entire group. So what they were doing, all these 7 women will, you can say, make sure peer pressure is present to make sure that they will pay back the loan. And this is how originally initial self-help group started. And after that, we started recognizing there is huge potential in these self-help groups to be able to use as a vehicle for development. And then we started adding lot of other things into the self-help group. We are giving loans, and they are doing, in Kerala they have done wonders. They went to a situation where they have created mini industries. Self-help groups have created even big manufacturing facilities also. In some villages in Kerala, they are running 30-40 buses by themselves. That means they have created private transport. So they started small, but they kept on, you can say, taking new loan and expanding their businesses. So this has led to economic empowerment and providing institutional services like transport and lot of other services to surrounding villages also. Most famous example in UPSC literature, wherever you see, will be Lijjat Papad, where this papad making factory has become very big, where it is supplying to entire country. It started out as a self-help group. So this economic empowerment of women through self-help groups, we want to replicate this Kerala model throughout the country, where socially women empowerment happens, economically you can say also empowerment of the surrounding areas will happen, and whatever is lacking, the institutional structure is created by this self-help group. Transport was missing, roads were missing, or something is missing, they themselves are actually coming up with a solution to solve that problem. PM Vishwakarma Kaushal Samman, this I have given what it is. It aims at hand-holding of artisans and people associated with small business. Majorly it is focused on artisans of India. Whatever traditional Indian art is present, art or some sort of maybe sculpture, all these aspects, whatever is there in art and culture syllabus, people who are involved in all these type of things. So government is going to focus on hand-holding and then converting these artists into entrepreneurs. That means they should be able to sell their art and make money out of it. So that is basically the goal here. Development of traditional artisans and craftsmen while preserving their rich traditions, enabling them to become entrepreneurs. So then tourism promotion in mission mode, this is also one of the goal. By increasing tourism, we can, you can say, create opportunities for areas where other opportunities are missing. That means there are many areas, some states in India do not have other sources of income. Here we can add, you can say, tourism as a solution for this problem. Then green growth is also one of the goal, because we have taken up sustainable development goals and we have obligations under Paris deal and any other future deals we will sign in next 25 years with regard to climate change. So that means green growth is also a part of it. Then 7 priorities of budget have been called as Saptarshi. So first budget of Amritkal will be guided by 7 priorities. All these priorities I have given here one by one. So they will not ask what are the priorities of government. They will, in budget, one thing I have noticed in exam is number of questions directly coming from the budget may be not very high, but there are spin-off questions from budget. This will be high. Spin-off means, imagine they talk about this scheme, Kaushal Samman. Then there is artisans. Some things about artisans they will ask in the, you can say, exam. Anything static about artisans which is already there in your normal static subjects. What are the previous schemes about artisans? Any law governing artisans in India? So something like that as a spin-off. This type of questions are common in prelims. You understood this? So some things I have tried to add whatever may become important as a static topic, which is actually static, but because of budget which has become important for this year, those things I have tried to add here itself. But you can identify by looking at what is there in the budget, what could be important in static topics, you can identify and focus more on, you can say, those topics for exam. So first is inclusive development. Here I have just given some facts, what has happened so far with regard to inclusive development. So, but what they have done now, this is only progress so far, and this is, I mean, directly it is not important for exam, just for your reference. Then what is important is what they have done now in the budget. Agriculture Accelerator Fund has been set up to encourage agriculture startups by young entrepreneurs. So Accelerator Fund means there is acceleration, basically means accelerators and incubators are part of startup ecosystem. When they have used the word accelerator specifically, that means it is slightly different from an incubator. What exactly is the difference? That is what you can see here. The duration of accelerator is less, but it is very intensive. Here the focus is on training. That means they will give necessary training and whatever skills are required to set up this agriculture related startup. So limited time frame, fixed number of intakes per year. Usually they will be cohort based. They will take only 100 startups and they will give the necessary training to them. Many accelerators offer pre-seed funding to startups in return for equity. That means they will say, we will give you 10 lakhs, you give 5% equity or something. They don't need to pay anything extra as money. But in incubators, you can see it is longer, and usually they will also take money. That means they might invest half value, half pre-seed round. And incubators may also take some, you can say, cash for training and such also. You can see fees. Majority of incubators charge membership fees or rent. So sometimes more also. Here, accelerators are not actually charging any money. Especially in agriculture, startups are not really interested in agriculture. There was some interest when farm bills were passed, but after they were repealed, not enough interest has been shown on agriculture. They feel that it is too political and anything may change, and mostly it is towards populist side. So not enough, you can say, they feel it is too risky, and that is why not enough interest is there. We want to give more, you can say, more opportunities for people, and that is why no fees is involved in accelerators. Accelerators put greater emphasis on training and mentorship. Some workspace like co-working space or something may also be provided. This is what accelerator fund means. Government is going to create this type of accelerators. Any private accelerators who are going to set it up, government is going to support them through buying some, you can say, partnership with them or something. So that is accelerator fund. In incubator, it is usually longer term office space is given, co-working space is given, and shares are bought. You understood this? Okay. Incubators, first thing, it is a longer term compared to accelerator, first thing. Rolling admissions and no formal cutoff. Here cohort based, it means there is a 3-month course for this you can say startup, they will join, and once 3 months is over they will get out, and another next 3 months next 300 startups will come into picture. But for an incubator you can join anytime, and once you are ready with your startup then you will leave. Other startups are also continuously joining. There is no exact you can say 3 months for 6 months or something like that is not there. It will keep on running. Some mentors will be present who will teach how to how to identify whether your idea is working, all such things. So that is how incubator works. So here pre-seed funding to startups is given for equity. Here also you can say there is direct investment may not be there, but incubators will call the VCs and other investors and create some sort of a setup network where others will invest in this particular startup. So in some cases, like you might have heard of Y Combinator and such other you can say these incubators, they themselves will invest a little bit, and they will also call others also and ask them to invest. Then fees here, accelerators don't charge much fees, incubators charge sometimes very heavy fees. They will give a temporary co-working space, but incubators, as long as you are incubated by them, co-working space usually is also a part of this. As long as you are there, you can use that space. You understood this?
So sir, incubator is not usually run by government?
Yeah, even accelerators are also usually not run by government. If government wants, they can set up either one of them. These already are there, and if they have specifically used the word accelerator, probably they have used it for a reason. Probably you can say this is what they want to set up. You understood this? So it will be set up to encourage agricultural startups by young entrepreneurs. Then digital public infrastructure for agriculture will be built as open source, open standard. Digital public infrastructure means, first of all, public infrastructure is a public good. Earlier we saw in types of goods what is a public good. Anybody remembers what is a public good? Non-rivalrous consumption and non-excludable. That means once this public digital infrastructure for agriculture is created, the data and the APIs or whatever you can say, you can use the data. Everybody can, all the startups can actually use the public data, publicly available data that is created in this, you can say, digital infrastructure. So a government would have collected all the data about India's type of soils and how many farmers are present and all this data, land records. So startups can utilize this so that they can create value for the farmers. That is the meaning of digital public infrastructure for agriculture. So it will be open source, open standard, interoperable. That means others can also interoperable with any lot of other technologies also. This will lead to growth of agricultural technology startups and industry. Atmanirbhar Clean Plant Program. This is for boosting availability of quality planting material. Planting material for horticultural crops. Horticulture means what? Fruits, vegetables, flowers. Flowers is floriculture, but in some definitions of horticulture also sometimes it is added. So these are basically horticulture. To horticulture usually they will not use seeds, they will use a part of the stem or some sort of transplantation or something. This is called planting material. This planting material, we have to identify what is good quality planting material and distribute that so that we can increase productivity and production of horticulture. For that we have created Atmanirbhar Clean Plant Program. So you should know clean plant is related to horticulture and it is related to planting material. So here you can see how this agricultural common infrastructure, digital infrastructure works. From agriculture we are already using soil health card, right? In that some Mrida Pariksha app is there which will test the soil, and sensors are used to collect moisture data in the soil and which fertilizer is needed here. All this data will go into some sort of central server which other startups will also be able to utilize. You understood? So this is how we want to build this sort of digital infrastructure for agriculture. Then Indian Institute of Millet Research, Hyderabad will be supported as Center of Excellence for sharing best practices. So millets are called in budget as Shri Anna. So this type of question may also be asked. That is why I have just given this Shri Anna also. So they will do research, and you can say with regard to millets they will do further research. Some millets may have ability to reduce insulin resistance or something, whatever we have advantage there, we will be able to identify it when we do research. So here somewhere I have given Okay, agriculture credit target has been increased to 20 lakh crores. Agricultural credit means loans given to agriculture. Usually under PSL 18% is given to agriculture. This part we have already seen. Along with this 18%, overall target is also given across the country that this much this year we have to give as loan to agriculture. Animal husbandry, dairying, fisheries also are included in these loans. You can give loans to them also. A new sub-scheme of Matsya Sampada Yojana with a targeted investment of 6,000 crores to be launched for fishermen, fish vendors, MSMEs. That means Matsya Sampada, everybody in the name itself it is there, that means it is related to fish. Earlier this is a slightly old scheme already, but because it is now in news, you should know about the scheme also a little bit. To enhance fish production to 220 LMT by 2024-25. Overall 20,000 crore investment they are doing. About fish in India, India has we actually have two types of fish. One is inland fisheries, one is coastal fish. Which one is produced more in India? Inland fish. Coastal fish, although we have three sides ocean, we have not been able to utilize the potential so far, and we want to increase it. Mostly, Meena Kumari report was released I think 2 or 3 years back related to how to improve coastal fishing. Meena Kumari report. So she said we have to start bottom trawling also and use large, you can say trawlers, big fish, big shoals of fish need to be captured, deep sea also. Some small farmers, small fish farmers and also people who have traditional occupation of fishing on the coast, they protested against this initially. But later, you can say permission was given for trawlers and they have started trawling. Along with that, she also said we have to ban fishing across the entire coast for around 90 days or something during fish spawning season. Spawning means when fish legs and shoals will increase. At that time, if you do fishing, it will lead to sustainable reduction. When we cannot have sustainable fishing, it will lead to reduction in fish shoals. So this is most of the fish consuming states in India are Bengal is first. Bengal consumes half of the entire fish in India, and then after that you can say we have Andhra Pradesh also consuming more seafood. Gujarat actually is a large fish producer, but mostly is a vegetarian state. It exports all fish to Bengal. And so India, because we have huge consumption of fish, export of fish is very less. Production of fish is also high, but consumption is high. Bengal is actually largest producer, largest consumer, largest importer of fish also, because in every meal they eat fish. So India also, fish is important in India for cheap source of protein. Compared to maybe in Delhi, in this area where it is not near to the coast, it is not cheap. But in southern states, which are about 200 kilometers away from the coast, which majority of southern states, you can say area will come under, fish is actually cheaper than any other type of meat. So it is a cheaper source of protein for nutrition for more than half of India. So then Sagar Mitras. Sagar Mitras will be people who have scientific knowledge on how to increase fish production. So in India, we have created this sort of a Mitra type of concept for everything. For solar project, Surya Mitra, for some other. So this person will be a nodal point who will actually bring the knowledge and be able to improve the implementation using that, better knowledge will lead to better production of fish here. Doubling fishers and fish farmers' income and generation of employment is the ultimate goal of this Matsya Sampada Yojana. Okay, what is revenue neutral rate under GST regime? Somebody has asked. Revenue neutral means whenever we change any tax regime. Imagine before we had sales tax. From sales tax, when we jump to VAT, revenue collection actually, you can say it has to remain same whenever we shift. Imagine we start collecting more revenue compared to earlier. What happens in the economy? More money is going where? More money is going towards government. If more money goes towards government, what happens in the economy? It creates a vicious cycle. You don't want that. Imagine government collects less money. Then government does not have enough money to run its, you can say, normal projects. Either case, it will create a problem. Revenue neutrality means whenever we change the tax regime, tax structure, compared to whatever earlier tax was, now also we should collect the same tax. That is called as revenue neutrality. To not create any negative impact on economy, we should have revenue neutrality, and we tried very hard to maintain revenue neutrality when we brought GST. But even then it was not possible. We maintained about 90% revenue neutrality, and still you can say we lost some revenue. So it is very difficult when we change everything and still we have to collect same amount of revenue. This is called as revenue neutral tax rate. So from this cooperative part we will take in next class. So if you have any questions in this class you can ask before next class. We'll end the class here. Thank you.